deal. But
yeah,
my other question, aside from how much, is does this push Constellation to open up another reactor there?
They're talking about it, and that's really significant because we haven't had a new nuclear power plant in the U.S. in a long time. We had the Vogtle plant that was finished last year, and it was like 7 years late. It was billions of dollars over budget. And I went down there for the grand opening. There were all these people saying, let's do another one. You know who wasn't saying that? Southern, the company that lost a ton of money trying to build it because nobody wants to be on the hook for the costs. So what I've been hearing ever since then is we'd love to build a nuclear power plant if someone else will make sure that they'll pay for it. Tech companies have big money.
All right, Will, thanks very much. Bloomberg's Will Wade covers this stuff, and as he said, he goes to these plants. He braves the radiation to bring you the news that you need. Saying, though, in the land of big tech, Microsoft eliminating 300 more jobs just weeks after cutting thousands last month. Disney also announcing job cuts. Here with more is Bloomberg technology co-host Caroline Hyde. And Caroline, 300 is not a huge amount, relative to the rest of Microsoft's workforce. But what's going on here?
Well, you need a lot of power for AI. You don't need so many software developers and engineers, it seems. And so actually, when we saw 6,000 people cut from Microsoft, that a large proportion of those people who were said farewell to are indeed development engineers. And that's because we're seeing Satya Nadella, the CEO of Microsoft, say, we are doing about 30% of our coding now via artificial intelligence. So everyone's trying to rework their workforce, whether that means you need fewer software engineering talent, or that means you actually just need to go out, goodbye to the old, in with the new, reorientate yourself. Look, we heard some coming out of Salesforce. So as they gave us their numbers last week, we heard that they too are perhaps not having to hire at the same pace as usual. They're able to slow hiring, and instead they're beefing up the sales department because they've actually got all the product, and now that they're able to start selling a little bit more rapidly. But this is really being echoed across the technology front. You're seeing people get leaner and leaner and focusing more on putting money on the energy side, the infrastructure side, and just developing the AI product. But for that, perhaps you need fewer people.
And it's interesting to note that we're having this conversation ahead of 10 a.m. JOLTS data when it comes to job openings. And of course, the payrolls print on Friday. You mentioned that you're seeing this across the tech industry, but it's not just tech. We got some interesting news from Disney yesterday, also planning to lay off several hundred workers, and they've laid off really thousands of positions in recent years.
I think it's about 8,000 have gone in recent years from Disney. Now, this is, again, not large when you think about 250,000 people that Disney currently has under employee base, but they are shedding a couple of hundred, it seems, once again in the content side. So we're thinking marketing, you're thinking just the way in which you're going to go out and promote movies and content. They're slimming down there once again because times are tough. They want to make fewer movies, get more bang for their buck, and we know what's happening to content, the amount of shakeups that are happening at Comcast, the way they're selling off MSNBC and CNBC. You've seen, of course, Paramount thinking about its own costs and being leaner. Warner Brothers has done a big overhaul as well. So this is, again, a restructuring vibe. And when you just think across the whole plethora here of technology and content, people are just trying to reorientate their workforce for a future. I go back to Microsoft saying, look, the spokesman saying we continue to implement organizational changes necessary to best position the company for success. It's a dynamic marketplace.
Well, it'll be important to see when all of these stories that we're talking about individually start to show up in the overall economic data. Great roundup, Caroline. That is Bloomberg Technologies' Caroline Hyde. And be sure to tune in tomorrow as the Bloomberg Tech Summit gets underway in San Francisco. We'll hear from industry leaders, including the CEOs of Uber, Rivian, and Peloton. Caroline and Ed Ludlow will have a special edition of Bloomberg Technology live from the event on Thursday at 11 a.m. New York time.
Hello, this is Dr. Paul Cottrell. We are live streaming on Rumble, on YouTube now, and on my website, the-studio-reykjavik.com. So please help support my work by making sure you subscribe to all the channels. I did get 2 strikes on YouTube last night, so it is important for you to subscribe to all my channels so you can get the latest and greatest. So all the links are in the description of this video and all my videos. So click those links, subscribe to the 4 channels on YouTube, Brighteon, Bitchute, and Rumble. Please share the links. Ask your social media to follow me. That way I can reach a larger audience to inform them about what's going on in the financial markets, what's going on with their health and wellness. All right. So please help support the work that I do. All the stuff that I do here is for free. So please help support. In addition, you can go to my store, get ebooks. I also have supplements and course material on immunology and pulmonology. Very cheap. It's only $50 for a module. And you get a ton of PDFs, ton of videos about pulmonology and immunology. You get a unique password. You log in as many times as you want. You can watch those videos and read those PDFs on your own time. You can log as many times as you want. You can do it at your own pace. So please help support the work that I do. If you're an international audience, which I do have quite a bit out there that are from Europe and elsewhere, and you can't purchase the products, please help support the work by sharing the links, asking your social media to follow me, and you can donate on my website, the-studio-reykjavik.com. You can donate through Stripe, PayPal, or Buy Me a Coffee, or be a paid member to Patreon. Again, I don't put anything behind a paywall. Please help support the work that I do by donating and purchasing the products I have. I greatly appreciate you listening. I also do a morning, what I call the morning coffee market review, going over just news feeds, what I'm seeing at, in that pre-session movement in the futures market, playing some videos on X basis. So just, listen in if you'd like to hear the pre-market session. It's usually a half an hour or an hour long. So with that, let's go to some of the news that's happening. All right. This is Times Radio talking about the drone strike. Now, the drone strike was pretty big, from Ukraine, knocking out a decent amount of aircraft from Russia, deep into Russia. So let's just play a little bit of the Times Radio about the Ukraine's drone strike.
I ran for the Attorney General to uphold the law, to uphold our Constitution, and protect New Yorkers from harm.
Sort of conventional superiority that Russia has.
The details of Ukraine's mass drone attack on Russia's strategic bomber force are scarcely believable. Somehow the Ukrainians smuggled more than 100 drones near to Russian Air Force bases thousands of miles from the border. They then launched them remotely in a coordinated attack. It's audacious and brilliant. How effective was it, though? The Times World Affairs editor Catherine Philp is in Kyiv and joins us now. Good morning.
Good morning, Kate.
Those are the basic details, but it is really an incredible feat the Ukrainians have pulled off, isn't it?
It's absolutely extraordinary. It's being compared in all over sort of Ukrainian social media to in particular the Israeli attack on when they blew up Hezbollah pagers in Lebanon and essentially sort of brought that organization to its knees. And so there's a lot of,
It's interesting she said that, because when I heard the news about this, I thought the exact same thing. I said, this is very similar to the pager incident.
Sort of comparisons that Ukraine has pulled off something similarly audacious, shall we say.
And what kind of damage has it done to Russian infrastructure and military and defense infrastructure? How big of a hit is this in those terms?
It's a big hit. I mean, what we heard yesterday was that they had hit 41 of these strategic long-range bombers. Now, these are the aircraft that that Russia uses primarily to launch long-range missile attacks on Ukraine. So we were told that they had hit 41 of them. There are only 120 of them, and most of them are no longer in production. We've now had further details this morning from Ukrainian officials that they completely destroyed 13 of them, is what they're saying, and the others were damaged. So, I mean, I think if you just look at that in terms of ratio, that's a fairly incredible figure when you when you consider that these are not these are not aircraft that can be easily replaced, if at all.
A significant moment potentially, and even more so maybe, Catherine, because there are peace talks that have been suggested today. Do we know if they are going to take place? What details do we know are definitive at the moment?
Well, we know that teams from each side left their home capitals yesterday and arrived.
Breaking news, Ford U.S. auto sales raised 16.3% in May on strong truck sales.
Ukrainian side were angry that Russia had not published its sort of position paper for the opening of negotiations, whereas Ukraine had made that public already and given it to Russia. So all we know still from the Russian side is that they're sticking to this maximalist position, that they have nothing to discuss unless Ukraine firstly stops mobilizing soldiers, and secondly that the West stops supplying it with weapons. So it's hard to see how they get past that, but there's been no direct indication so far that what happened yesterday in terms of those strikes on the strategic bombers, there's no indication yet that those have derailed the talks. And in fact, what is being said on the Ukrainian side is that the attacks put Ukraine in a stronger position because they're no longer essentially negotiating from a point of weakness, you know, and that they've also sent a message to the West as well that they are still in this fight and that they can actually take on that incredible sort of conventional superiority that Russia has, because Ukraine has nothing equivalent to those planes, to those bombers, and that missile capacity that Ukraine took out so much of on the Russian side.
Finally, Catherine, I mean, we often see this, especially the talks process, through the prism of where America's support lies currently. In the past, it swung between being seemingly supportive to Russia, now perhaps a little bit more behind Ukraine. We've obviously not had a Donald Trump response to that Ukrainian attack in the last couple of hours. But do we know where his sort of support lies at the moment as we move into those next stage of talks?
Yeah, well, as you say, it's very unpredictable. I mean, recently he's, shown unprecedented frustration and anger towards Vladimir Putin, but he's also, he sort of has an almost congenital dislike of Vladimir Zelensky, which he can't seem to dispense with either. So he does tend to sort of swing between blaming each side. Now, I think it's interesting that what he's been most critical of Putin recently is for launching attacks on the eve of talks, just as Ukraine did yesterday. But the difference being that it's when they have been against civilian targets. So you've seen they've tended to result in imagery of civilians being.
The socialists are at the gate, and Zoran Mamdani is leading the pack. If they take over New York City, this is what they said they will do. Defund the police. Consequences for genocidal Zionist imperialism. Abolish capitalism. You can stop Zoran and his socialist comrades from running New York City into the ground. Vote Whitney Tilson for mayor on June 24th.
Being hit in places like Kyiv and other cities in Ukraine. I think essentially the ingenuity of the Ukrainian attacks on the eve of talks yesterday was that they were such clearly defined military targets that showed essentially that Ukraine was still in this fight.
Yeah, it's a really good point, Catherine. Thank you very much for your time this morning. That is Catherine Philp there in Kyiv with the latest on that Ukraine mass drone attack. And we will keep an eye out to see whether Donald Trump posts anything about it on his Truth Social network. We'll bring you that when we see it.
Okay. All right. So let's, we are about 10 minutes before the New York Open. We have the Equity futures for the S&P 500 down just under 5 points. It's trading at 5,942, which is a decent level. And we'll see if it, what happens during the session here. VIX is trading at 18.42, and the Japanese yen is trading at 143.39. Oil is trading at $63 a barrel.
This will not be a calm market. The market is expecting some sort of resolution or some sort of progress. If they don't get that progress and we go the opposite way and we start putting in more and more tariffs and not making progress, we're going to have a problem.
And that was Wells Fargo strategist Chris Harvey, who holds the title of the biggest bull on Wall Street. Meanwhile, you have Deutsche Bank lifting its S&P 500 target as markets recover from trade shocks. Specifically, the firm lifted its year-end forecast to 65.50 from 61.50. That implies a 10% gain from Monday's close. Joining us now.
For the ones that are watching the live stream market moves on YouTube or on my website, the-studio-reykjavik.com, I was mentioning earlier during the show that was live streaming on Rumble that there's sometimes you'll see in the oil market in pre-session or after session where the price is going up. And then as you get closer to the opening, the price starts to go down. And that's exactly what was happening here. So we had a price of like 63.40 pre-market, and now it's trading at 62.99. So this is the reason why I said kind of just watch it. Sometimes it ebbs and flows. The question is if the trading range is going to be moving a little bit more closer to the upper bound, closer to $65 a barrel. Not sure yet. Normally I've been selling at about 63 and then buying at about 60 or 61.
Priced into the market.
That's right. Earnings estimates are lower than they were in February, lower than they were on April 2nd. And we had the OECD, for example, come out this morning and say, we don't expect 2+% growth anymore for the US. Now it's 1.6%. How much does the Fed need to cut? And are they going to be able to do that if we don't get some clarity on the tariff policy of the United States?
Yeah, that's exactly the right question, Matt. I think when you look at what's priced into the market, give or take 2 cuts, I think it's a probability weighted outcome. So if things get really bad, and by the way, the chances of a recession coming through by the end of this year, those chances are dropping from where they had gotten to, right? Many people are pulling back their expectations of a severe slowdown. But for example, if there were one were to happen, you could see 3-4 rate cuts. At the same time, if we're fine, if the labor market, as we might find out later today and through the course of this week, if the labor market remains resilient with no massive job destruction, I think the Fed doesn't need to go at all, or maybe just once towards the end of the year. So the probability adjusted outcome of those two look like about 2 rate cuts. Do they need to go if inflation is sticky and growth still lower, but still about a 1% level? I would say maybe just once.
All right, Gargi, you're sticking with us through the opening bell. We'll see you on the other side of this commercial break. Let's take a look at the setup as we count down to the ringing here. You can see the S&P 500. It feels like it wants to go green. We were looking at much steeper pre-market losses just a few hours ago, but right now down about 0.1%. The NASDAQ 100 is already there, pretty much flat, but the color is green. But it's the small caps out in charge, Matt Miller. The Russell 2000 up about 0.4% with about 4 minutes to go until the open.
Wow, we still look at the Russell 2000.
And we should.
We're going to continue, right? You're going to keep that on the board?
Until they drag me off the set. A price-weighted index, can you imagine?
You know what? We'll change it on the World Equity Index screen as well. We'll replace.
All right, we're about 5 minutes into the market open here, or 5 minutes to go before the market opens, I meant. Natural gas is trading at 3.6. There's a lot of movement going on there. We'll talk about that a little bit later. And let's take a look at Trump's steel and aluminum tariffs and how it's going to affect our economy.
Your business is crushing it, but unless they've got the right help desk software.
Oh man, tickets just won't stop.
Welcome back. Let's check steel stocks this morning after U.S. steel stocks soared yesterday after manufacturers said they are preparing for President Trump's increased steel and aluminum tariffs. They go to 50% beginning tomorrow. The president signaling he will clear the $14 billion merger between U.S. Steel and Japan's Nippon Steel, saying this will not include layoffs and that the steelmaker will be, quote, controlled by the USA. No final deal has been reviewed or approved just yet. Joining me now is Zeckelman Industries Chairman and CEO Barry Zeckelman. Barry, good to see you. Your company is a leader in the steel industry and the global trading, especially between Canada and the U.S. Give us your sense of the 50% steel tariffs that will take effect tomorrow. What's the impact?
Yeah, first off, I want to thank the administration for their continued focus on this issue. I mean, the impact will be broad. There's no question it's going to have a dynamic and an immediate impact in the U.S. on a lot of the steel products that come in. I think the upping the duties was the right thing to do. In some cases, it's at the right level. In other cases, it's still probably not enough. I think it'll have a dramatic effect on Canada, and it's going to force Canada to take a stand like the U.S. is taking. And Canada needs to push the imports that come into Canada out to create a robust Canadian market where Canadian steel can be consumed in Canada and pushed out, just like the U.S. is trying to do. That'll balance the trade between the U.S. and Canada, and then hopefully we can get to a resolution between the two countries where we need to be.
Yeah, I mean, I'm glad you mentioned Canada because it remains the top steel exporter into America, sending more than $7 billion worth of steel into the U.S. last year. We've got a chart here that shows Mexico, Brazil, and South Korea round out the top four, all hovering at around $3 billion in annual steel exports. Germany, Japan, Taiwan, Vietnam also on that list. As far as aluminum exports, Canada is number one again by an incomparable margin, sending more than $9 billion worth of aluminum into the U.S. But when you look at the groups and the countries that are leading the import and the export, rather, of steel into the U.S., how does this global trade relationship and supply chains change things now with the 50% steel?
Well, in Canada's perspective, of course, Canada is being invaded by steel from other countries. And like I said, that needs to get pushed out. In cases like Mexico, Vietnam, Taiwan, Thailand, all of those others, the problem there is they're being used as a proxy by China. So, Taiwan and Vietnam have increased imports of steel from China dramatically and then transship it into the U.S. or make it into various products and then ship it into the U.S. at the expense of U.S. consumers of steel. So in Canada's case, we're under the same type of attack as the U.S. In the other countries' cases, they're being used as a proxy for China. And we need to balance this out. We need to push that back. The biggest thing that we contend with. Sorry, Maria, go ahead.
No, you go ahead. What's the biggest thing we have to contend with?
Yeah, the biggest thing that we contend with is we don't have a long-term trade policy. So it's hard for us and consumers of steel and producers of steel to make long-term investments. We want to know if we're investing 100, 200, 300 million, $1 billion, that we're going to have years and decades for that to run prosperously and pay off. So we have to have a long-term strategy. We have to have a comprehensive strategy that closes all the loopholes, all the back doors, like these transshipping countries, like the derivative products, and then we're going to have a robust steel industry here with robust consumers and tremendous employment, tremendous job opportunities, tremendous income, and we will secure our nation's future. I mean, the problem today is, people say, well, prices are going up. Why are drug prices so high in the U.S.? Drug prices are high in the U.S. because we don't produce any of it here. That's the problem. So we don't have that option to be efficient here. We don't have that option to negotiate against countries who ship those drugs in here because we don't produce it here. Can you imagine if we didn't have a steel industry or we didn't have steel consumers? If you think the price of steel would be cheap in the U.S. because we'd be able to import, it would be the other way. Yeah. The other way would be they have us hostage. We can't do that. It's a national security issue. We have to take this.
Are you expecting retaliation from Canada? What is Canada going to do in the face of this, since it's the lead exporter into the U.S.?
Yeah, so I'm actually in Ottawa on Thursday. We'll be talking about this issue. As you know, I'm a Canadian consumer of steel, and you know, I'm up against these tariffs coming into the U.S. Although I have much more production in the U.S., I think Canada's stance should be Canada should push out the illegally dumped and foreign steel that makes its way into Canada. It will create a robust market in Canada, which will then take the pressure off Canadian steel that goes into the U.S., and that trade will balance. And I think the U.S. will have to look at that and say, look, the U.S. ships $5 billion of steel into Canada every year, but Canada ships $7 billion to the U.S. I think that needs to be balanced. And I think it's balanced, and that the U.S. can look at Canada and realize and be certain that the back door to Canada is closed and that foreign steel won't transfer its way into Canada and into the U.S. I think the relationship between Canada and the U.S. will definitely be a much better relationship. I think the temperature will come down, and I think we can create a really fortress North America. And I think that's what the president and the administration wants. They want fortress North America to push out all the bad actors. And Canada can be a good part of that.
China. I mean, China is sending all sorts of imports through all different countries, and likely Canada as well. Right? What are your thoughts before you?
Absolutely.
Before you go, Barry, what are your thoughts on this Nippon-U.S. steel deal?
Yeah, I can't see behind the scenes in terms of the CFIUS issues and national security. What I can say, and you've heard me say before, I think that if we have a robust trade policy, certainly the steel industry will do well. Look, we welcome investments. I welcome new capacity. I welcome new efficient capacity. And if the investments that Nippon wants to make in U.S. steel are going to truly bring that, it only can be good for a consumer like me. It will give us access to more steel, more cleanly produced steel, more high quality steel, more geographically centered steel around our plants, so it's easily accessible. So if we truly push out imports, we're still a net importer of steel. If we can push them out and add capacity here, God bless. I think it's great. And, I wish them all the success. And obviously the administration feels it could work. So, I'm going to support it. I'm a strong supporter of President Trump and his policies regarding steel.
All right, Barry. Great to see you this morning.
All right. The market is opened. The S&P 500 is trading at 5,933. VIX is trading at 1844. Euro USD is trading at 1.13. Oil is trading at $63.05 a barrel. BITO is trading at 21.105. That coincides with Bitcoin, I think, trading at about 105. Bitcoin is trading at 105,000 a token. USD and Japanese yen is trading at 143.42. Natural gas is trading at 3.655. UCO, which is an ETF for oil, 2151. Gush is trading at 20.79, which is another ETF to long oil companies. And DRIP is the inverse of that ETF. That's trading at 11. Now, let's just reiterate, the S&P 500 resistance level is 6,000, support level is 5,750. Oil's major support level is 54. Looks like it's being traded in a range with a 60 handle to about a 63 handle. But because some of the news that has been coming out with OPEC and petrol logistics, that it's possible that trading range has inched up about $2. So I'm watching very closely with oil to see if it really starts to climb or if it starts to sell. Another resistance and support level set of data to take a look at is for BITO. BITO is trading at 21.09. Again, that's the ETF for Bitcoin, to take a look at Bitcoin. Major support level at 20, and the nearest resistance level is 2148. It's trading at 2111. The nearest resistance is 2148. And then if that breaks, then the next resistance level will be 22.50. So if Bitcoin starts to go up, then if it goes and starts trading above 106, then most likely we'll see a break of 2148.
Finding spots.
Well, Matt is sweating over here, so let's try to get him a little bit more scared. I want to game plan that scenario the next few months where maybe, okay, you get a cooling down that turns into a softening in the labor market. Let's say inflation does have a little bit of pressure under it and it reignites a little bit. We had a note from JP Morgan yesterday, actually, writing that they think that we could enter into a stagflationary episode here that would end the S&P 500's rebound. Can you rule that out, or do you have to keep stagflation risk on the table?
I think you have to. I think the direction of travel could be in a stagflationary direction. Obviously, a lot of that depends on the growth expectations from the tax bill, as well as how much of the tariff unwind really, catapults many companies to go back to spending and manufacturing and all of that. So we are going to learn more about it, but this is why we talk a lot about adding diversifiers in your portfolio. So to the extent that many portfolios that we analyze have had a very high percentage allocation to US equities, we're telling investors, close your underweight to the other areas of the world, close your underweight to emerging markets as well as European equities. You don't have to go overweight here, but certainly sort of have a more diversified portfolio. Add things like tips, add things like gold. These are areas of the market that we think could do well in that stagflationary environment. And very importantly, market neutral strategies that have a low beta and a low correlation to the broader S&P or the NASDAQ or the Dow that I know you love to watch. I think that's going to be another source of diversification, much needed when uncertainty is high.
All right, Gargi, that's a good place to leave it. Great to see you again. That is BlackRock's Gargi Chowdhury. Meanwhile, let's get a check on this market and take a look at the setup, because we're taking a look at breadth again. And similar to yesterday, it's not awesome right now. It's not quite as bad as yesterday when we had more than 400 names in the red, but you can see we have more than 300 in the red right now, 176 pushing to the upside. Once again, it's NVIDIA that is leading the charge. Small move overall, but when you're that big of a company, that makes you the biggest gainer on a points basis here. You also have Broadcom, Tesla, and Constellation Energy higher right now. Take a look at the downside, though. This sticks out to me. Keep an eye on Alphabet, because once again, this is your biggest loser right now. If this holds, this will be Alphabet's 5th straight day of losses, down another 2% right now. Let's take a look at how this looks on the sector basis as well. It's close to an even split. I'm not quite sure if this is quite it, because I believe that I had tech at the top right now, but you can see we're talking about small moves overall. Utilities up top right now, up about 0.5%, industrials, and then tech. It looks a little defensive to me, Matt Miller. And then you take a look at the bottom, it's real estate, materials, and communication services leading the way lower right now, Matt.
Yeah, no, it does look defensive, but I think that's because of Constellation, right? So usually if investors are buying utilities, that's a sign that
True.
they may be a little bit scared. But today you've got Constellation up on the Facebook headlines. I want to also point out that if you're watching the breakdown of the Dutch government, the prime minister has offered to resign and continue in a caretaker government. Of course, that government fell apart because the coalition came unglued. When we come back, we're going to talk about something maybe a little closer to your heart, and that is Texas and the stock exchange in the Lone Star State. Texas is preparing for its stock exchange debut in 2026. We're going to speak with former Congressman Jeb Hensarling, who is now strategic advisor for the TSE. Next, this is Open Interest.
Not really sure why they're doing that, unless it's tied to crypto. It might be. We'll listen in when it comes on. But please go to my store, the-studio-reykjavik.com. Thank you for joining, the ones on Rumble and on the ones on YouTube, greatly appreciated, or the ones that are watching on my website, the-studio-reykjavik.com. I received 2 strikes yesterday because YouTube doesn't want you to buy lozenges and drops or the silver gel. All right. So let's talk about multivitamins right now. It's a very important foundation for your health and your protocol. So we're going to be talking about protocols throughout this session, what I take, all right? Everything that I talk about, I take. Now, some people can't afford everything. That's okay. If you stack it the way I tell you to, you will benefit. So multivitamin is an important foundation for your stack. Multivitamins here are cofactors for enzymatic activity. So it will help for your cells to perform its cellular processes. So please go to my store, get this multivitamin. This multivitamin is easy to digest, and it has your important ones like vitamin A, vitamin C, D3, the B vitamins, right? Folate. So it's really important. So please go to my store, the-studio-reykjavik.com. Drink it with filtered water. Now, another great supplement that I offer is magnesium and zinc. Magnesium and zinc will help to boost up that immune system. Magnesium also is really important for brain function. So please go to my store, the-studio-reykjavik.com, get the magnesium and zinc. Magnesium also helps the efficacy of vitamin D3. So you can get magnesium via my store through the Boomer Boost, through the magnesium and zinc, or through the vitamin C and magnesium. So let's talk about that one. Vitamin C and magnesium is a dual purpose vitamin. It helps with your skin, helps with your immune system, and helps with brain function. Magnesium also, again, increases the efficacy of D3. So it's important to have magnesium in your diet or in your supplementation. So a great stack would be the magnesium and zinc with the vitamin C and magnesium, and to take the multivitamin. This is a great stack to work with. All right, it's dual purpose. It's helping with your cellular processes. It's helping with the immune system. It's helping with the efficacy of D3. It's helping with your skin. So please go to my store, the-studio-reykjavik.com. And oh, by the way, since YouTube doesn't want you to buy lozenges and drops from my store, go ahead. Go to my store and buy the lozenges and drops.
This is Bloomberg Open Interest. Quick check on stocks, and we are looking at gains right now, just barely, obviously. So I guess little change is a better way to put it. But they're we're looking at a little bit better NASDAQ 100 trade right now, up 0.1%. You can see that the VIX is also unchanged right now, trading at 18.4, and Russell gaining about a third. In terms of the individual movers, NVIDIA, once again, pulling us up on the day, gaining more than 1%, which it's a $3.5 trillion stock. So that means a lot to the indexes on which it is listed. Tesla also a gainer today. You can see Facebook down after that 1%, and Constellation itself gaining almost 7% on that new power delivery contract. Katie?
We'll continue to follow that story, but let's turn our attention to Texas. The Texas Stock Exchange has filed its Form 1 registration with the SEC to register as a national securities exchange. Reporting says it has secured over $161 million in funding as it aims for a 2026 launch. Joining us now, I'm thrilled to say we have Jeb Hensarling. He is the Texas Stock Exchange Strategic Advisor and former chairman of the House Financial Services Committee, as well as Julie Fine, our own bureau chief down in Texas. And Julie, a great time for this conversation because I know Jeb sitting next to you has some big plans.
There are some big plans. You do have a pretty aggressive timeline, Congressman. Thanks so much for being with us. Sure. Are you still expecting the SEC approval coming later this year and the trading to begin in March or in next year, 2026?
Well, first, Julie, thanks for having me. This is the most exciting project I've been involved in since I left the United States Congress. And yes, that be part of the first fully integrated stock exchange to come to America in 2 generations. Very exciting. Worked with the SEC for a long time. We believe we're on track to receive approval for our Form 1, Q3, possibly Q4, and then trading to start in the new year. And we are very excited. It's going to help put Texas even more on the map than we already are.
Since this has happened, as you know, there have been a lot of other exchanges that have made some moves. The New York Stock Exchange has now placed an equities exchange here. NASDAQ has a regional office here. So, Congressman, how do you handle this competition that came from that?
Well, imitation is always the greatest form of flattery. I'm not sure had the Texas Stock Exchange been formed, you would have seen this action. With respect to the New York Stock Exchange, number one, we welcome the competition. And unfortunately, we can't quite compete yet until we get our Form 1 approved by the SEC. But, you know, with respect to New York, they took a Chicago medallion and Federal Expressed it here to Dallas. Again, happy to have them. NASDAQ clearly has an office, but we welcome the competition. We welcome the attention. And it really, in many respects, I think, validates one of our value propositions, and that is Texas is the place in America where people want to go to do business. And it's been the vision of Governor Abbott to make sure that not only is Texas the best venue to start a business, but to headquarter a business and now to incorporate a business and go public, trade, issue, all in Texas. And the Texas Stock Exchange is the next iteration to that. And we're going to have a lot of competitive advantages. But again, bring on the competition. It's a big state. Come on in.
All right. I love the ambition there. Let's talk about how you plan to compete, because one of the notions that's been raised is that maybe you need a few big anchor listings to really get the exchange off the ground once you list. And with that in mind, are you courting any companies at this moment to basically switch their listings when you do go live?
Oh, I think there'll be lots of companies that will will engage in dual listings. But Texas is going to be able to compete on a number of different fronts. Number one, we look very carefully at the economics. And we have a duopoly. I mean, that's just the fact of the matter. And because of that, we believe that there are efficiencies to be gained that can be shared with issuers. Next, Texas is going to be the issuer-aligned exchange. This is going to be a value-add proposition. Number three, there is going to be an advantage to list with a stock exchange that is actually based in Texas because of frankly, the political risk. Increasingly, companies have to calculate political risk. Texas has just passed 4 really major landmark pieces of legislation, one of which has to do with the fact that we're going to have written into our Constitution there won't be a financial transactions tax. They're threatening yet again to impose another one in New York. Technically, they have one. As you probably know, it's rebated. As a practical matter, they don't. In addition, on certain shareholder proxy fights, there's a very low threshold there. It takes up a lot of expense, a lot of C-suite time. There'll be a larger threshold, higher threshold in Texas. There's just going to be a lot of different reasons for people to come and enlist on the Texas Stock Exchange. And our CEO, Jim Lee, has put together the A-team. There has been a brain drain from the competitors. And already, as you may know, Dallas has more financial professionals today than New York. So again, we're going to have lots of competitive advantages. And as soon as the ink's dry on the Form 1, we're going to be happy to start competing.
Well, to your point, Congressman, I actually covered Rob Morocco and Allison from NASDAQ and from SIBO coming over and joining with the Texas Stock Exchange.
I'll tell you, I think that Texas, if you're looking at an arc of like maybe 40 years of activity in the future, Texas is going to be a major state.
Company that has embraced Texas in a big way, of course, is Elon Musk. You have Tesla now incorporated in Texas. Have you been in any conversation with the team over there about potentially embracing the Texas Stock Exchange as well?
Well, I would say people are having lots of conversations. It's a little premature to talk about those conversations until, once again, the Form 1 by the SEC is approved so that trading can actually begin. We're very, very confident. Again, there will be major companies in America who are going to choose to list and certainly trade on the Texas Stock Exchange, and there'll be co-listings as well. But you're already starting to see, again, corporations, move from Delaware. You've already seen a number of companies that will change their listings. Already you have so much of the trading that doesn't even take place on the listed exchange. There's lots of opportunities to compete. And again, there will be a lot of competitive advantages that we believe Texas will have.
Congressman, you just talked about CEO Jim Lee, and when we spoke to him earlier, he said he now believes with this legislative package that Texas is in direct competition with New York and Delaware. So I want to know, before we let you go, what defines success for you in the first year?
We have so far met all of our milestones so far. So I think simply being able to establish a world-class trading venue come in Q1 of the next year, that we start to have large Fortune 500 companies start to decide this is where we want to trade, and later in the year to be able to get new IPOs. And that's one of the whole reasons to start the Texas Stock Exchange. When I was in Congress, I care deeply about the fact that we've seen this secular decline, if you will, in companies going public. I think Texas can help reverse that trend. So if you'll see that line start to flatten out, and again, we have more companies being able to go to the public markets and do it under the Texas brand, that will be success.
I really appreciate your time today. That is Jeb Henserling of the Texas Stock Exchange and our own Julie Fine, our Texas Bureau Chief. A great conversation about an ambitious upstart when it comes to the exchange place. Let's take a look.
Wait, did you say Y'all Street at all the whole time?
I didn't say Y'all Street, no, but thank goodness you did.
Yeah, because I love that.
Yeah.
Apparently they're calling it Y'all Street. So if someone says y'all to me in, casual conversation, right, I feel a little sick to my stomach. But if you say Y'all Street, I think that makes it cool.
And it makes sense because it rhymes with Wall Street. It's very cute. Stocks turned green, by the way, during that conversation, the S&P 500.
Yeah, not because of that conversation.
No, but it did happen.
And this is a pattern that we've seen lately. I think Dan Curtis was saying this morning 19 times in the last 12
That sounds like something he would say.
Sessions. All right. Gen Z says online dating is...
What's also interesting is Texas is a major hub for energy production. Oklahoma is the Oklahoma Cushing facility. I mean, this makes a lot of sense. I'm surprised it hasn't happened a long time ago. But there is kind of almost a centroid shift I'm starting to see of power slowly away from the East Coast to Texas. There's kind of a slow moving thing, and we won't benefit from it because it won't see its really zenith until about 100 years or 125 years from now. But you're seeing the beginnings of it. Can you imagine the beginnings of the New York Stock Exchange? The very beginnings of it, and how it started to, gain momentum and went through its growth phase and recessions and again growth phases in the United States. Something similar is starting to take hold in Texas. Now, once it starts taking hold, the question is will it accrete or will it get gobbled up by larger trading houses? There might be a merger acquisition kind of thing that takes place in the future. But it's interesting to see and how Texas is evolving. So another thing that YouTube doesn't want you to purchase from my store, not just the lozenges and the drops, but also the structural nanosilver gel. So maybe you should go out and buy some because YouTube doesn't like that. Now let's talk about probiotics. Probiotics are really important as a foundational piece. It stacks really well with a multivitamin, but having a probiotic in your stack is super important. I have it in VeggieCap form and in powdered form. I take the powdered form for my lunch, but some people don't do that. And so you can take it in the VeggieCap version or in the powdered version. But please go to my store, get the probiotics, take it every day. They'll bring down inflammation at the gut level, allow you to absorb your nutrients. improve the mucosal barrier in your gut. Your IgGAs concentrations will go up. You'll have better communication between your gut and your liver, and your gut and your brain. You'll be less irritable. You'll be able to focus better, and your skin will improve. If you have a good gut biome, a lot of people don't realize this, manifestations of a poor gut biome will show up. Well, if you improve your gut biome, those physical manifestations will start to go away. So please go to my store, the-studio-reykjavik.com, and get the probiotic. Again, I have it in a powdered form and a veggie cap form. And also, just because YouTube doesn't want you to buy lozenges and drops and the gels, go to my store and get the lozenges and the drops. Just because YouTube thinks that you shouldn't have them. Please go to my store, the-studio-reykjavik.com. Make sure you use discount 5 and you get $5 off any order. It's discount, all caps, number 5, and you get $5 off any order. And help support the work, because I received 2 strikes yesterday on YouTube because they don't like lozenges and drops and gels. Okay? So please go to my store, the-studio-reykjavik.com.
Merge boxes. And of course, they have Apple TV, we have our box. Never actually happened. In one of the meetings, he said, well, you should give up because we're going to win that. Well, you should put Wi-Fi in all your boxes. And that's how you win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi, right? And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley, in LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It didn't seem like you were leaning. You said these.
I want to play this CNN video. It's saying Ukraine says it has struck bridge connecting Russia to Crimea with underwater explosions.
Says it has hit the Crimea bridge in an underwater attack. I want to show you this video, which was posted by Ukraine's intelligence agency, showing the moment the bombs went off. While this is the 3rd time Ukraine has hit the 12-mile bridge that's connecting occupied Crimea to mainland Russia since the war began, Ukraine is describing it as a new type of operation. We've got CNN's international diplomatic editor, Nick Robertson, in London for us. And Nick, we're watching this video. You can see those underwater bombs going off. I firstly want to talk about the damage we're seeing on the Crimea bridge. It's clearly very strategic for Russia. Tell me what we know.
Yeah, as the Ukrainians say, it's the third time they've tried to target the bridge, and this time they've gone for one of the sort of vertical concrete pillars that holds the bridge above the water, 35 meters above the water, 9 meters of water. It's not clear how deep. If it was at the base, there's a lot of silt at the base of the Kerch Strait there, that's underneath the Crimea bridge. So this explosion, the Ukrainians are saying, involved 1,100 pounds of TNT equivalent. That is a pretty massive explosion. We've just been able to see some video shot from a distance from the bridge, and you really can see a huge plume of smoke, water rising up next to the bridge, but it's not quite clear what has actually been damaged, the lasting damage, the impact of all of this. It's important for Ukraine to target because...
So we got like two breaking news is coming out here. So U.S. April jobs openings, 7.39 million, estimate was 7.1. So job openings were higher than estimates. So the chances, all right, the U.S. April quits rate, 2%. U.S. April job quitters, 3.19 million. All right, so this data that's coming out is reducing the chances of the Federal Reserve lowering rates. U.S. April layoffs, 1.78 million. The equity market right now is trading at 5,941. VIX is trading at 18.32. And oil is starting to go up based on this news.
Ukraine is trying to blow up this bridge. The two previous attempts were different. One, 2022, the explosion seemed to be much more at road level. An explosive placed just under the road level disabled the road for a period of time. And then the other one, again, innovative in 2023, these baby sea drones, as they were called at the time, waterborne drones, innovative effort by the Ukrainians to hit the bridge at water level. And that's why the Ukrainians this time are saying this is an underwater attack. This is what makes it different. And of course, with so many stanchions under that bridge, the Russians have got quite a job on their hands now to see if Ukraine is actually putting out accurate information that there may be more explosives underneath some of the other pillars.
The future of performance management is visual. Increasingly, digital signage is taking center stage when it comes to driving productivity.
I also want to talk about Ukraine striking Zaporizhia and Kherson and leaving people without electricity. This is within Ukraine, but it's Russian-held territory. Keeping in mind that we saw a sophisticated attack deep within Russia yesterday. The assault seems to be quite aggressive right now from the Ukrainian side. Tell me what we're seeing in Russian-held territory right now and the significance of this, Nick.
Yeah, the significance appears to be, when you're cutting off electricity, it's demoralizing to the Russian forces there. One of the reasons Ukraine has sort of held back from doing this sort of attack on its own territory, albeit effectively annexed and controlled by Russian forces, in part in Zaporizhia, in part in Kherson, is because there are Ukrainians living there too. But this does seem to be the Ukrainians trying to take the fight to the Russians in a way that that undermines Russia's warfighting abilities. Ukraine is taking some losses at the front. We've seen Sumy in the north, the town there, be heavily hit and targeted again in the city center, according to Ukrainian city officials in Sumy, right into the city center, missiles landing in the city center. So there's pressure coming on Ukrainian forces by, if you will, Russia's, if you want to call it standard military tactics of hammer and grind away at the front, hit cities just behind the front line, whereas Ukraine is trying to sort of hit in a precision way, potentially because that they view as the best use of the weapons and munitions that they have at their disposal. And that does seem to include hitting the electricity or taking down the electricity supplies in Zaporizhia and in Kherson.
All right, Nick Robertson, thank you so much for that update. I want to bring in military analyst Cedric Layton, who's joining us live from Washington, D.C. Cedric, always good to have you on, especially when we're just seeing so much news coming through. I want to talk about, there's so much that's happened. Ukraine striking the Crimea bridge with these underwater explosives. This is after striking Zaporizhia, Kherson. We saw what happened deep within Russia. How are you reading into these attacks? And is it making a big difference in terms of the calculus and the strength of Ukraine right now that has clearly been on the back foot for quite some time?
Yeah, Eleni, great to be with you again. The big thing that the Ukrainians are trying to do is basically what Nick pointed out, and that is hit strategically important targets. And so when you see what they're doing, you go through every single aspect. There's a lot of planning that's involved in what the Ukrainians have been doing. And that planning seems to indicate that they're looking at the most effects that they can achieve. So when you look at what's happening with the bridge, the Kerch Bridge, which is a strategically important, vital link between Russia proper and Crimea, they are basically saying, the Ukrainians are saying that this is the place where they are going to, in essence, take a stand. They don't have the manpower to reoccupy Crimea, but they will make it as miserable as possible for the Russians who are occupying Crimea. And that is one of the ways to do that, is to cut off the supplies, make the bridge basically unusable. It's both a rail and a road bridge. And that bridge is basically the one that is such a prestige project for the Russian Federation. Putin himself was there at the opening of the bridge, and he was there at the reopening of the bridge. So that's the kind of thing that they understand. The Ukrainians understand that the Russians have these prestige projects, and they are very much interested in damaging those prestige projects. And the Kerch Bridge is basically at the top of that list. And then if you move on to what has happened with the bomber fleet and the other airplane involved with everything that was happening on Sunday, you see that there are so many different target sets that the Ukrainians were able to, in essence, prosecute, and using that kind of as a military term, which basically means that they went after these targets. So when they went after these targets, they were sending a message. It's a risky operation, both operationally and politically, as well as obviously diplomatically. But the operation that they engaged in is one in which they sent a clear message that everything that the Russians have, their most valuable assets, that all of that is potentially at risk from Ukrainian unconventional attacks. And that is something that could potentially be a game changer for the Ukrainians.
That's rightly so. I mean, you know, it's also showing vulnerabilities on the Russian side, where the Ukrainians were able to go so deep within Russia on this covert attack, which clearly was successful. We've also heard Zelensky explaining the logic behind this. Cedric, I want you to listen to what he said.
Don't pay anything to fix your roof. New York City homeowners can get a free roof while paying.
We don't want to demonstrate our strength. We are demonstrating it because the enemy doesn't want to stop. We demonstrate it in a fair way on military targets. And we don't only demonstrate it to the Russian aggressors, but also to all those allies that once were strong allies and have now started doubting us. The trust towards Ukrainians and faith in Ukraine has returned.
So that's the theory. That's Zelensky's thinking. But does it give Ukraine an advantage? Because there's a difference between what we're seeing on the front lines and then these precision attacks.
Yeah, there definitely is a difference. So when people see attacks like this is basically, in addition to being a military war, a military campaign, it is also a PR campaign. And it's very essential for the Ukrainians to basically bring their allies back, convince people in the United States that Ukraine is worth fighting for. Same in Western Europe, making sure that each of these allies of Ukraine, as Zelensky has called them, that they truly stand with Ukraine. And it is these kinds of attacks, these basically sensational attacks, that really show that the Ukrainians have capabilities that in essence belie what is happening on the front lines. The front lines, they're not collapsing, but there are definitely pressures on the front lines, and it's very difficult for the Ukrainians just by sheer numbers of personnel, the difference between the Russian forces and the Ukrainian forces in terms of numbers and in terms of equipment and just in terms of volume. What the Ukrainians are doing is they're relying on precision, as Zelensky mentioned, and that precision does several things. First of all, it shows that the Ukrainians are using intelligence very precisely. They are not using the old Russian or Soviet method of going after a target with mass, with lots of military forces, with lots of weapons, with lots of artillery. They're basically modernizing what the approach is on the Ukrainian side, and that means less indiscriminate killing when it comes to civilian targets. Basically, the Ukrainians try very hard not to hit civilian targets. The Russians don't care, and that's a big difference between them, and that helps the Ukrainians from a PR standpoint, especially in the West.
Behold, Cecilia, Disco's new AI assistant. Hear it hum this weekend.
All right, please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer, such as Clarity Factor. Clarity Factor will help to get rid of that brain fog. And by taking Clarity Factor, you're going to be able to concentrate on tasks. That's very important at work or at school, or even if you're retired. And when you are having that concentration and you're taking Clarity Factor on a regular basis and drinking it with filtered water, what's going to happen is that you're going to have positive neuroplasticity. You're going to improve those dendritic connections. You're going to be thinking faster. You're going to have better memory. Really important. So please go to my store, the-studio-reykjavik.com, get the Clarity Factor. Improving your brain health is very important in terms of anti-aging and just having a better life in your geriatric years. It's very sad to see people in their geriatric years or even before their geriatric years where they start to have cognitive decline. And there's ways to mitigate it. So it's about proper supplementation, proper diet, proper exercise. Exercise is really important. Staying away from processed foods, reducing inflammation, drinking filtered water, detoxifying your body. When you do this in a holistic way, you actually are improving your neural health. For example, the 4 modalities of exercise. Weight training activates a certain type of muscle, a certain type of muscle by a certain type of neuron. Stretching exercises activates different neurons at the end of your muscle. Balancing exercises activates the coordination for the kinematics of all these different neurons and activates that cerebellum. And cardio gets better blood flow. So you're allowing for nutrients in that microenvironment to establish these better connections with the neuron. So please go to my store, the-studio-reykjavik.com, and get the Clarity Factor.
In fact, the minutes last week, according to our natural language processing model, suggested that they were as neutral could be at the last meeting.
Yeah, he does this thing, and it's really cool. You put in Fed speak, and then his model tells them whether they're on the bullish or the bearish side, or I guess hawk or dove side, if we're putting it in Fed terms. So walk me through what you're expecting then for Friday and how we're positioned in the market, because honestly, it's been pretty calm the last 2 days.
Well, so one of the things that we've noted, and I was talking to our derivative strategist Tanvir Sandhu just this morning, and he noted that for long end, right? So we've had this lot of angst with what's going on in the 30-year debt and even 10-year debt because of the fiscal situation and the fact that we're not really paying down deficits very much. That people are long puts, right? So people have gotten out of the money puts on long bonds. So therefore, it might be more difficult for the long end to sell off just because people are appropriately hedged. But I do think that there's a lot of people who are kind of waiting and seeing what the economic outcome is going to be. But that being said, there are people who are nibbling at the edges, particularly when you get up to that 5% level in 30-year bonds, because liability-driven investors, so insurance companies, pension funds, and a few others, they're really interested in treasuries at 5%. So I think that's another reason why we keep on seeing a bid every time we kind of get above that 5% level on the long bond.
Long ago, Lisa Abramowitz taught me to look at the 210 spread there. And right now it's about 50 basis points of steepening. That feels kind of normal to me, or kind of reasonable to me. How does it look to you?
Yeah, so actually on a historical basis, it's actually still kind of low. Normally, when you look at the 210s curve, it's somewhere closer to 100 basis points on average. We do think there's some structural reasons why I'm not sure that we'll get up to where it has during other cycles. But I do think that steepening is still probably the trade, whether it's bull steepening or bear steepening. We're more likely to see steepening than we are significant flattening, I think, over the next 6 months. The fiscal situation will likely keep the long end where it is, or maybe even actually have that cheapen, so yields going a little bit higher. But as the economy slows, which is our base case scenario over the course of this year, it will become more obvious that the Fed is going to cut rates, and cut rates maybe more aggressively than what's currently priced. And that will cause 2-year yields and the front end of the yield curve to rally and yields go lower. So that will steepen the yield curve. So we think that over the course of this year, one way or the other, whether it's bull or bear, we'll see more steepening of the yield curve.
Right, bull or bear, like do you get it on the front end and that's why the curve goes up, or do you get it on the back end and that's selling in the long end, and do we get that higher? Ira, thanks a lot. Ira Jersey, Bloomberg Intelligence, Chief U.S. Interest Rate Strategist, joining us there. And to that point, you're looking at the 2-year at 3.94 and that 10-year at 4.43, but it's the 30-year, Paul, that keeps getting all the attention. It's sort of butted up against that 5% level, but only closed above it like just a few weeks ago, but haven't been able to capture that level again and stay there. So
no. And it seems it just feels, you look at the curve every day like we do, it feels kind of range bound here. And again, probably waiting on the Fed to see what is the next move. Probably nothing in June, as Ira was suggesting, but maybe something later.
Watch my market analysis video, episode 58. I go into the spread between the 10 and the 30-year. And when it starts to widen, it doesn't stay, that spread doesn't stay widened for very long, and then it comes back in. Now, I can come in for different reasons, the economy, the Federal Reserve move, whatever. But it's at about, that spread is anywhere from about like 0.49 to about 0.51. So 0.49 to about 0.51 for the spread between the 30 and the 10-year. It's been as high as around 75, all right? So when you're in the point, when you're 50 basis points or 75 basis points for the spread, it usually comes in. So there's going to be some traders that play that spread. So just keep that in mind. That doesn't mean that the yields will go down, because the spread could come in with the 10-year yield going up and the 30-year not. And this dovetails into what they were saying. You have institutionals that are buying the 30-year when it hits 5, but you have many other types of investors that don't have such a long horizon that are locking in a duration for 30 years to lock in that 5%. And they're more at the 7 to 10-year level. So they're looking at the 10-year, and they may not be biting at 4.4 or 4.5% to buy up these bonds. So those yields at the belly of the curve can be coming up, while the yield for the 30-year stays at about 5 because you have buyers there, right? So you keep that in mind. But if the Federal Reserve lowers rates, then most likely that yield spread will also come in, all right, and push the 30 down a little bit, push the 10 down a little bit. And because it's going down in the 30, you would have less institutional buyers because it's below the 5% yield, and therefore it falls quicker. All right. So, you know, there's these dynamics that are taking place with institutional investors, very big institutional investors in the bond market, especially when it comes to insurance or pension funds. Then you have institutionals that are managing people's money. And those institutions don't have such a long horizon, and they're closer, they're more the belly of the curve or at the front end of the curve. All right. So that's the reason why there's these different dynamics that are taking place with these yields with the yield curve and these different durations for the treasuries. Okay. So take a look at episode 58, and I have a chart there that shows this spread and how it changes over time. And I overlay it with the Federal Reserve when they raise rates or when they lower rates. So it's very interesting. Now, because of the economic data that came out, the Federal Reserve is not going to be cutting rates anytime soon. So with that, let's talk about the ETF BITO. All right, that's what I've been looking at for Bitcoin. Bitcoin's trading at about $105,000 a token. And BITO is trading at 21.23 right now. And BITO's near resistance level is 21.48. So we're below, we're not that far away from that resistance level. But we're not going to be able to break that 21.48 until we start seeing Bitcoin, above the 106 mark. Now, the next resistance level, if 21.48 breaks, is 22.50. Now, your support level is 20. So it's trading at 21.24, support level is at 20, and you have a resistance level at 21.48. So that's what's going on with BITO. Now, let's take a look at oil for a second. Natural gas futures is trading at 3.68, and it can move. It sounds boring, but it can move, especially when you take a look at leveraged ETFs. So oil and cold are ETFs. Oil is when natural gas is going up. Cold is the ETF, spelled with a K. Coal cold is when the futures is going down. So when you're looking at the natural gas, and there's some wild swings that could be happening. It happened last week, the wild swings. If it's moving up, buy oil. If it's moving down, buy cold. Now, the resistance, or what is it trading at right now? So oil is trading at, which coincides with a 3.68 in the futures market for natural gas. So oil is trading at 54.95. 54.95. All right, so 54.95. And the thing is that this thing moves a lot. So when I did my prep for the show, the resistance and support levels changed. So it's at 54.95. So now we have a resistance level at 55.28. And we have a support level at 51.48. If it breaks the 55.28 today, then the next resistance level will be 60. But right now, the near term resistance level is 55.28, support level is 51.48. But oil, because it's a leveraged ETF and it has leverage decay, it moves quick. All right. So you got to really pay attention. You got to really Hawkeye the natural gas moves and oil. So that's another one that we are watching. I do not have a position in natural gas yet. But what is interesting is that UCO is now trading at 21.80 and oil is trading at 63.54. So like I said in the early session, because of Petrol Logistics' data about what's out there in terms of inventories and shipping, that they think that OPEC is understating what actually has been produced. And that when they're increasing production, they're just trying to hide the actual production that they already did months ago. So therefore, there's really no new stuff being produced and being stocked in inventories. Now, that may not be true, but we'll see. On top of it, Cushing seems to be lower in inventories compared to last year and it's on the low side of the 5-year trend. So that would mean that WTI should be going up. And voila, we are seeing that we're in the upper range of that trading range. I said there about a 60 handle and a 63 handle is the trading range. So if we break 64, then it looks like that trading range has moved up about $2. So if it does, then we're probably going to be at it's 65 for the resistance and a support level at probably around 62. So we'll see. We'll see what happens. But that's what seems to be taking place here. Okay, let's go back to Bloomberg. Wait, before we do that, please go to my store and make sure you buy the lozenges and the drops, because YouTube doesn't want you to do that. They gave me a strike, actually 2 of them yesterday, because they don't like they don't like me telling you to buy lozenges and drops because they don't think they're good for you. Also, make sure that you get toothpaste and the gel, because YouTube doesn't like that either. They don't think that you should have that. Please go to my store, the-studio-reykjavik.com. Help support my work and take the stuff that I take. I take the lozenges. I take the drops. I use the toothpaste. I use the gel. All right? It works. Trust me. Please go to my store, the-studio-reykjavik.com, and get the very high quality deodorants that I have. I've partnered up with Rainbow Herbals, and we've developed these deodorants that are dual purpose. They help to detoxify your body, and you use it as a daily deodorant. It has no aluminum, no baking soda. It's made from essential oils from the Himalayas. Extremely high quality deodorants. It's for males and females. You can get it in citrus, and you can also get it in peppermint, lavender, and tea tree. Extremely high quality deodorants that will help to detoxify your body. So please go to my store, the-studio-reykjavik.com. Use discount 5, and you get $5 off any order.
Certain time. And here to help us understand that is Jose Minaya, Global Head of BNY Investments and Wealth. And he joins us now right here on set. Jose, thanks for joining us.
Thanks for having me.
Yeah, it's awesome.
Great energy over here.
Yeah, it's really great. We're really happy to be here. So we're talking a lot about the whippy headlines we have when it comes to tariffs, but your job is to talk to clients about wealth long-term and long-term investments. When they call you up in panic, what do you tell them?
Yeah, it's pretty interesting because there's more urgency and there is a little bit more anxiety in the voice of our clients. I would say our advice hasn't changed. Probably the last decade, we've been talking about preparing yourself for volatility. You may have inflationary pressures, geopolitical uncertainty. What you see now, we are at a peak of uncertainty. And yes, the markets have kind of moved through this pretty well, yet our clients have felt the volatility. They've been through those moments where correlations went to 1. And what was a academic discussion around solutions and outcomes is now an urgency. So I think today what you're seeing is a lot of clients coming to the table saying, how do you help me protect my principal? How do you help me kind of drive towards income solutions? And what is the technology? What are the capabilities that we have to do that?
Has your portfolio construction allocation, has that changed any over the last 4, 5, 6 months? Or is your equities, bonds, alternatives, that kind of thing, has that kind of stayed the same?
That's always fluid, right? And as part of the investment process, I will tell you what has changed, though, is how we're delivering and executing to our clients. Again, you're seeing a lot more alternatives coming into the mix. You're seeing a lot more technology allowing that. I heard a stat this morning where fund launches for the first time, there were more on the registered alternatives versus unregistered. This tells you that demand was there. Again, academically, people understood it, and now there's an urgency. So you're seeing a flow to How do I get more solutions oriented versus a 60-40 portfolio or stock ideas?
But longer term, talking about correlations, there are questions as to that long-term treasury curve, right? And the sustainability of the debt and what that looks like and then how it correlates to stocks. So in some ways, it's fluid, your allocation, but there could be a structural shift. What are you seeing?
There could be a structural shift. I think we're fortunate BNY clears almost the majority of the treasuries and markets. And it's interesting to me, I don't know what they're teaching at business schools today, but no longer can you just say, let's look at the yield curve and these things. Dynamics have changed. And today you're following what's happening with treasury markets, the liquidity in the treasury markets. But to the individual investor, it does not. Again, it goes back to what are your outcomes? How do we help our investors in that market and say, maybe you should protect more of your principal. Maybe there should be more of an income focus. What are the correlation benefits we're looking at? Yes, around the edges, you've got different investment processes, people that look at these markets. For us, though, is taking all the capabilities that we have, which run the full gamut, and saying, how do we deliver the right solution, customized for our individual clients?
Jose, we saw earlier this year, funds flow.
The average person that is around 20 years old to about 45 years old, all right, should be at about an 80-20 mix, 80% equity, if they want to do passive, 80% equity and 20% bond fund, like AGG. Now, non-leveraged, all right? Everything's non-leveraged. So 80% in the S&P 500 or Russell 2000, something like that, and 20% in an aggregate bond fund. Non-leveraged, 80-20. If you're in your 20s, all the way to about 45. Once you turn about 45, you want to switch it to around 75-25 mix or a 65-35 mix. All right? And do that until you get to about 60. And then what you want to do is once you get to 60 and you're assuming that you want to retire at 65, then you should be at about a 50-50 split. And then when you retire, then you get out of your equities and you are more focused on guaranteed fixed income. All right? That is the most prudent way to do it. Now, there are some people that want to take more risk, and you can add risk by changing that ratio, being more active in trading, getting into alternatives, investments like, crypto, and, you can go into the commodity space or emerging market space or even currencies. All right. But the average person, their passive portfolio is typically some sort of split between the equity market and the bond market. It's that simple. All right. And it's just passive. All right. Now, if you rebalance all the time, and then you may be hurting yourself. Now, if you want to be more active, then you can have much higher returns, but you're having more risk and you can have lower returns. Like I said, the last 6 weeks, if you've been following me, the money that you deployed would have earned you around 10 to about 25% return, depending on when you entered and how you entered and what was the dollar cost averaging. But you would have made money. All right. Or if you do leverage funds, yes, there's volatility and you can lose money. But if you are on the winning side of the trade, you can see 30, 60, 100% return or more. All right. But you got to watch and you got to know what you're doing. But the average person doesn't know what they're doing. So, that's a little bit more advanced, and stop pretending that you know something that you don't. All right. There's lots of people that think they know something and they really don't. So if you want to, save over a long period of time, multiple decades, and be prudent, it's as simple as what I just said. around age 20 to about age 45, an 80-20 or 75-25 split, higher on equities, between 45 to about 60, you want to go down to about a 60-40 split, and then from 60 to 65, a 50-50 split. And then when you retire, then it's all liquidated into a fixed income. Now, if you add in some, spicy sauce, when you're trading and you're doing some stuff like I'm doing, like, trading commodities, all right, and under a leverage situation, then you're seeing huge gains, but you also have to be able to be prepared to take those shocks when those news events happen. There's been times where I've been in the oil market, either longing or shorting, and something happens in the Middle East or something is happening in Ukraine, and it affects the oil market, right, in a negative way. And that's why you have to kind of build these hedging strategies, because you're in a leverage situation and you have to build a hedging strategy, but you need to be advanced to do that. And there's too many people that think that they're smart, that they can think their way through it. Most people can't. Most people can't do it. But the thing is that if you pay attention to me, you'll benefit from the knowledge that I have. And you don't have to take as much risk. All right? So like I said, if you just did the dollar cost averaging when the sell-off was happening and it hit the 4,830 mark, and I said, don't be fearful, buy in and keep on buying in, slowly buy in more shares, then you would have seen about a 10 to 25% return on your money, depending on what you did and how you did it. All right? And that was just using a non-leveraged ETF. Now, if you used a leveraged ETF and you did some other complicated things that I'm not going to talk about, you could have had a return, about 100% return. All right. But you could have lost a lot too. All right. So this is how you do it. All right. Just don't make it complicated. It's like fishing. Just pick the style of fishing that you feel comfortable with and just stick to that. You don't have to fly fish and ocean deep sea fish and do clam farming and fish for lobster and all this stuff. Just focus on one thing and do it right and be an expert at it. Understand, get the rhythm of whatever you're trading. When you do that, I'm talking about for someone that's active trader, when you do that, you'll be successful. When you try to be Mr. Wall Street, all right, and try to trade everything, you're going to blow up your account. All right. Please go to my store, the-studio-reykjavik.com, and make sure you get the structural lozenges and drops that I have. I received a strike on YouTube, and they don't want you to hear on how great my products are. So they censor me. So make sure to go to my store, the-studio-reykjavik.com, and get the lozenges and the drops. I'd use them. I think it's self-evident on why you would use them. And not only that, get the gels. Those are really important for you too. Now let's talk about another product that's great on my store, the-studio-reykjavik.com, nattokinase. It's fibrinolytic. It's going to break up clots. And nattokinase is going to help to bring down LDL and help to bring up HDL. That means your lipid profile is improved. And when you have a better lipid profile, you have less plaque buildup. So please go to my store, the-studio-reykjavik.com, and get the nattokinase. It's a very high quality nattokinase. Use discount 5 on any order and you get $5 off. I also have in stock again the lignans, the digestive enzyme complex, and the zeolite. The zeolite helps to detoxify your body. The digestive enzyme complex helps for digestion and reduce the load on your pancreas. And lignans helps to bring down inflammation, improve your endocrine system. It's a very important with boosting up the immune system and helping with the endocrine system. Extremely important. So please go to my store and take a look at the new stock of lignans, digestive enzyme complex, and zeolite.
Surging, they're increasing the annual guidance. This follows a first quarter that topped projections. The company does see same-store sales gaining as much as 2.5% this entire fiscal year. Right now, this is the best performing stock in the S&P 500. Dollar General shares are up 13% currently. Energy, the best performing major industry group in the S&P 500, as we see crude oil prices rising. NYMEX crude, that is up 1.8%, $63 a barrel. Job openings increasing for the month of April, defying Wall Street forecast. The number of openings nationwide rising to 7.4 million in a pretty broad advance. And of course, on the data front on Friday, that's the big one. The government issues the monthly employment data. Economists forecasting a pace of payroll growth. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that, Alex and Paul, is your Bloomberg Business Flash.
All right, JT, thank you so much. We appreciate that. Alex Steele, Paul.
Now, the ones that are watching the dashboard that's on YouTube or on my website, the-studio-reykjavik.com, BITO, which is tied to Bitcoin, that's the ETF. It's trading at 21.31. There's a big move upward. And again, the resistance level that we're looking at is 21.48. We'd like to see a break 21.48. Now, most likely, Bitcoin is trading at probably still at the 105 mark. Let's take a look here. Yeah, it's trading at 105.9. So it's almost there. It's trying to get over the 106 level. So if it gets over the 106 level, we're going to see a little pop on the BITO ETF.
In your markets outlook, kind of balance the hard data that's still kind of hanging in there and some of the softer data, the more forward-looking data that maybe is ringing some alarm bells.
Yeah. So I think the short answer is time. Time will tell. But what do we mean by that? As I'm sure you talk about here with a lot of guests, this is the widest split between the hard and the soft data we've seen for some time. And so the way that we're thinking about it is, time will really determine if this consumer and business sentiment is going to anchor and pull down GDP growth and the underlying economy, or whether actually the resilience, because the data is okay. I'm sure you talk about the data is okay. If that continues, then maybe what it's showing is the economy is resilient and can find its way through all of this uncertainty. And we'll see the soft data. Same thing everyone else is, but I really think about it from a time factor. It can't stay like this forever. We've been like this for a while. We've started to see the soft data turn just a little bit. Mm-hmm. So the next few months are going to be key.
So that's sort of the consumer sentiment. What about investor sentiment?
Yeah. It hasn't really, from our perspective, from the clients I meet, and you had Jose on here before, there's definitely this uncertainty, and you can unpack that in a lot of different ways, but it hasn't really changed all that much.
Right, it's like anxiety, but they're not like putting their money where that mouth is.
Correct. So let me explain that through the data that we have. So we have this view called iFlow into what's going on across our client base. So what that's been telling us is some of the reducing of US assets, some of the selling of US assets has been there for some time. It's been there for a year or so. So often we'll get asked the question, is this a Liberation Day effect? Well, no, it's not, because some of the rebalancing we've seen has been going on for some time. So it's more gradual, medium term in nature, if you will. Where's it going? Well, we've seen some go into Europe over the turn of the year. You can see that in the asset prices since the turn of the year. But we've also more recently seen some of that go into the Asian markets in the last couple of weeks.
Did it surprise you that the retail investor was the one buying the dip here? And just if you look at fund flows into Qs and Vs and all the other stuff people look at on the ETF front, flows were coming in big time, even during the height of the uncertainty.
We saw the same. Does it surprise us? Well, if you look backwards, they've been doing it for quite a long time, and it's very much the investor sentiment. So we saw the same. We saw the institutional clients hold, largely speaking, so they didn't sell, they didn't buy on the way back up, but we saw that retail constituent and the wealth constituent buy the dip in April, ride it back up, and we're seeing just a little bit of rebalancing. I wouldn't quite call it selling, but we've seen a little bit of exiting.
What about institutional? So they didn't buy that dip, they held. What are they doing now?
Outside of what we talked about, I would point out they're hedging the US dollars. So we have a way to see the hedge ratio of foreign investors for the US assets. And so, again, I'm sure you talk with a lot of guests about the outlook for the US dollar. It's been weakening. Where to from here? So if you put that through our data, there's more scope for clients to continue to hedge more of their international assets, their US assets from international investors, and therefore the weak dollar trend continues. So that's one thing that we see that's interesting, that's likely to continue.
You mentioned the weaker dollar. That stands in contrast to what we've seen for some other risk assets like equities, which have rebounded. The dollar has not. Does that suggest that maybe that era of U.S. economic exceptionalism, is that kind of a thing in the past?
I answer that in two ways. You have to take a step back and look at some of the structural pieces. There's many of the structural pieces of the US economy that are still intact, that are likely to continue for quite a long time. The alternatives to those are nowhere near as strong. I also like to remember when these topics come up that it's very much about the starting point. And so we saw such a run up in positioning and sentiment classified as US exceptionalism that a retrace or a balancing or an unwind of that doesn't necessarily mean the story is over. But yes, we are seeing some exiting of US assets. So I wouldn't go so far as to say that this is the end, but we do observe some of the same things that you're asking about.
And do you think that rebalancing or just a little bit of movement, is that permanent? Or does it come back? Are we like permanently diversifying into, I don't know, what, yen, euro, European equities?
Nothing's permanent. This is why we're in the game.
Right, but meaning that, is it triggered by the current uncertainty, or was it an acknowledgement that, look, we're just really overweighted U.S. assets, we really just have to diversify?
I would say a little bit of both.
Okay.
As I said with the data, this isn't just a new administration trade policy exit. This is something that's been going on for some time, and so I think it's more moderate than that. But as we've seen, if you go all the way back in the data, decades, things ebb and flow, and so we're in one of those ebb and flow cycles now, away from the US and into other asset classes. Could it turn around? I think it could. I mean, the question about the US equity market is a great one. It rebounds and catches people's attention, and it could easily attract assets back to the US.
You spent a lot of your career in the currency business. To you, what is U.S. dollar being a reserve currency? What does that mean to you? And is the dollar at risk of losing that level?
Let me answer it in reverse. I would take the essence of what I just said in terms of we're in a trend here, but the fundamentals are still strong. Okay. I would say the same thing about the US dollar. I don't think we're in a situation, as we sit here today, that the US dollar is going to lose its reserve status, but are people rebalancing away from the US from a very high proportion of holdings? Yes, they are. And so, like, what does it mean? In the currency markets, it's paramount, whether it's transactions, trade, funding markets, cross-currency funding activity. And so it's such an important part of how the market functions, and I think it will continue.
Don't bet against America. See, what it is that I think there's two types of investors that he's talking about. Domestic investors that are moving some of their allocation to foreign countries, foreign equities, or even bonds, right? Or even currency. So they may be shorting the dollar, they're shorting the U.S. currencies, and they're shorting the U.S. treasuries and moving over to, let's say, international markets. That's the domestic investor. Now there's an international investor that has currency exposure issues and all this. And they are pulling out of the equities, the U.S. treasuries, and the dollar. All right. But the thing is that as our economy becomes more vibrant with the economic clustering. And even if you don't think that that's even going to happen through this whole tariff war, the issue is that our economy will be better off than Europe's economy or Asia's economy. Let's just look at where they're at right at this moment in time. What's the contemporary status of Europe and, let's say, Asia, especially China? Okay? China is having problems. That's even if we don't have tariffs. They've been having problems because of this overbuild out of their cities, these ghost cities. A lot of the municipalities, a lot of these provinces had to take out loans for this rapid growth. They grew too fast, and now they have an economic problem. This is independent of the tariffs. All right? Companies are already moving operations out of China. But let's just say that they stay there, which they're not, but let's just say they stay there. The Chinese market is still a problem because internally they have a structural issue. Even if the United States starts buying a bunch of products from China, they still have a structural issue. It's exacerbated because of the tariff war. So investing in Asia is a bad idea. All right. So if the United States goes into a recession, all right, who's going to buy the Chinese products? So China's going to be worse off. If the United States has a boom and we don't bring back manufacturing, then China will be selling more goods, but they still have a structural problem. So investing in China until they fix their structural problem is not a good idea. Okay, now let's look at Europe. Europe is spending more money in defense. All right. And so they are going to be increasing their deficits. And there's going to be as they're moving towards defense spending, they're going to have less money really for their social programs. So people are going to have to pay out of pocket for healthcare or maybe even retirement, or even schooling, all right, over time. So people in Europe most likely will have less disposable income over time. Would you want to invest in an environment like that? So who's really the most robust in whichever path this goes? Either mild recession because of the tariff war. If it's a mild recession, everyone is going to fall. There's no region that's not going to fall. And who's going to fall faster will be China. The next one will be Europe, and then the United States. So in a global recession, who's going to be the safe haven? So once you start hearing problems in the economy in Europe, and there's layoffs, and they're starting to do that now, then investors are going to go, well, wait a minute here. We need to get out of Europe and move back to the United States. Those are for the domestic and for the international investors. They bet against America and they will lose. Trust me on this. And you don't even have to just take my word for it. J.P. Morgan, back in the 1800s, late 1800s and early 1900s, warned American investors, never, ever, ever bet against the United States, ever. Because there's something unique about it. You may call it exceptionalism. It could be just, it could be this free market coupled with a constitutional republic that has property rights. But there's something special about it, all right, that Europe doesn't have and China and other Asian nations don't have. All right, whatever it is, whatever the secret sauce is, we have it, they don't. So when there is fear in Europe, they're going to come back to the United States. And they missed out. Listen to what that BNY representative was talking about. He was saying that the institutional investors missed out and didn't buy into the dip. And it was the retail investors that bought into the dip and made money. Well, wait a minute here. The institutional investors actually overthought the problem, and they moved out of the United States and moved into international markets. And then they have created another risk exposure, and they're going to get hurt, thinking that they were going to a safe haven. I'm telling you, I'm right about this. Don't bet against the United States. So let's talk about the dollar. Should the dollar go down? What's the benefits of the dollar going down? The benefits of the dollar going down is that one, post-COVID, the last 4 years, all right, have been an elevated DXY. The dollar index has been up above the historical 10-year average. It needs to come back down to about 97. It's been trading between a little bit above 100, a little bit, in the 99 handle. All right? So it's been bouncing around. But they're freaking out. Everyone's freaking out. Oh my God, the dollar's weakening. Well, it's been elevated because of a post-COVID situation, because everybody else wasn't as strong in the United States, and the United States market was much stronger. Our economy was much stronger to weather the storm. So, okay, the dollar has been elevated for the last 4 years. Everyone has goldfish memory, and we need to go back to a 10-year average. All right, that's around 97. Fair value is around 98, 97. All right. The question is, will it go lower? Okay, I don't know. But the thing is that it's definitely elevated above historical averages. So it needs to come back down. Now, what does that mean for our exporters? Our producers exporting goods to other nations. It would help them. Okay. Trump wants that because we want to build economic clustering. The problem is that the last 35 years, there's been two societies. One that wants a weaker dollar to be able to produce goods and export. And you have another group of society that wants a strong dollar to get assets from other countries to come in and invest in the United States. So the transnational capitalists want a stronger dollar, stronger bond market, but a weak manufacturing. Now, a stronger dollar and a stronger bond market is great for Wall Street. It's great for lawyers. It's great for people talking, on Bloomberg. But it's not helping Main Street. It's helping Wall Street. And not only that, it loses our manufacturing prowess for military excursions. We need a manufacturing base to have war. All right. So you had this class of people that wanted a strong dollar, weak the United States manufacturing. We import goods from China and we build up China. And the political theory would be, well, as they become richer, they'll become democratic. They won't be a communist nation. Well, it built up and it's still the CCP. And we are moving into war. And now we have gutted our manufacturing base. And now we have to rebuild it up so we can have the manufacturing base to support our military. So Wall Street made money to build up China and weaken our military industrial complex. That's a fact. All right, so don't bet against America. I'm telling you, don't bet it. Don't bet against America. You're going to get hurt. You're going to get hurt. You're going to get hurt. So, all right. So a weaker dollar from the perspective of the transnational capitalists is bad because it's changing their paradigm. Because they made money the last 35 years through a capital account, positive capital account. While the other side of the equation, Main Street lost because of a trade deficit. All right, so sometimes maybe a trade, a trade surplus is good. And maybe sometimes a capital account surplus is better. But to say that one is always better than the other is not what happens in the real world. It's cycles. And we are ending the globalist cycle. Now, it doesn't mean it's going to be easy, and it doesn't mean it's going to be fast. But the thing is that is changing. So it's shifting power of the center of gravity from transnational capitalists to producers. Or maybe a better delineation is producers versus consumers. See, in a consuming market, they don't want you to produce. They want you to consume and buy products from a cheaper, low-cost area. The problem is Main Street America's true wealth goes down while the uber rich get even richer. Okay, now you have a better idea of really what's going on. And this longer arc, right, of the economy and 35 years of transnational capitalism and how it eroded our manufacturing base. And people are now in the capital markets having a shit fit because for the last 35 years, that was the game plan. That was those were the rules of the road. Strong dollar, strong treasury market, weaken the manufacturing base. And Trump's doing the opposite. He's saying strong manufacturing base, weaken the dollar, and the treasuries are going to fluctuate because of this. Because these institutional investors and these transnational capitalists, they look at it, okay, dollar is going to weaken, then that would mean that yields will go up. But you have these different levers. Yields go up for a few different reasons. Yields go up if you have inflation. All right. Yields go up if the weakening of the dollar. Yields go up if the Federal Reserve raises rates. All right. Or yields can go up even if there's no inflation, even if there is no Federal Reserve raising rates and no reduction in the value of the currency. Rates can tick up just by having a good stock market. Because with a good stock market, if the stock market's moving up, people buy stock and not bonds. Well, if you're not buying bonds, yields go up. So there's 4 reasons why yields go up. So it's not so simple if they say that, well, if you're bringing back the manufacturing base, that yields are going to go up and that the treasury prices are going to go down. Maybe, maybe not. Because there's 4 levers. All right. So it's a complex system. But the side that's going to lose out from a shift from globalization to localization, the losers are going to be the transnational capitalists, not the producers. Mainstream gains power, Wall Street loses power. And that's why you keep on hearing the demonization on the mainstream media about Trump's policies. Now, if you look at the history of this, Clinton, during his first term, tried to do what Trump's doing. He tried to bring back manufacturing, and the bond market had a hissy fit. They wanted to weaken the dollar. The Clinton first term wanted to weaken the dollar. Well, Wall Street didn't like to hear that. Now you got to remember, when this was all happening, this was the beginnings of NAFTA. All right, Wall Street didn't want to hear that. So what did they do? Bond yields started to go up, and the Clinton administration chickened out. So the bond vigilantes, as you hear these terms, pushed our economic policy towards globalization. Fast forward 35 years or more, and guess what? We gutted our manufacturing. And it gets even scarier. Jobs are being supplanted by AI now. So, but don't bet against America, because the countries that are going to fall quicker, if there is a recession, the regions that will fall quicker will be China and Europe, not the United States. And because we'll be falling slower and we are more stable, what will happen is that we will get those foreign direct investments. But this is a longer arc. And if the institutional investors were so smart, why didn't they buy into the market? While the retail investors did. Because the institutional investors are on the side of transnational capitalism. And they have bought into the dogma, and they just missed out on a great opportunity to make money for their client.
Constellation sends energy to the grid, then Microsoft buys it from the grid. The difference then is made up between Microsoft and Constellation. So if Microsoft pays more, Constellation's to pay them back. If they pay less, Microsoft tops it off to Constellation.
Love
so
that.
It's not like a one for one. We don't know if those are the correct terms, but I have it on good authority. But we can kind of think it's something a little bit similar. You good? That was Alex.
I'm on it. I'm on it. I'm on it. One more. How about Lululemon?
Yeah, Lululemon. Two analysts upgraded their target prices this morning, and that's just ahead of earnings on Thursday. So kind of a positive signal for Lululemon. I mean, this could be a stock that a lot of people have been down on Lululemon this year. I think it's down around 13%, but it has rebounded 30% since April lows, since we started to get maybe a little bit of the cooling in the tensions between some of our trade partners when it comes to tariffs. So yeah, I think that's kind of a positive signal heading into earnings. Analysts are kind of calling for a beat at the top line and then reiterate for the full year targets. And right now in this market, that's kind of good enough for a lot of these retailers to get a positive stock.
It's very important to take a look at the dashboard for the ones that are watching. The BITO for intraday trading is at 21. The high point is at 21.43. It's trading at right now 21.42. And again, there's a resistance level at 21.48.
Apparently not tights, though, for you guys.
Thank goodness.
Just, we're a little worried about that.
Yes.
No, JT will be checking that out.
Yep.
All right, Red, thanks very much. Red Brown joining us from Bloomberg. And for more conversations like this, subscribe to our new Stock Movers reports. Listen to 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else that you listen. All right, I want to talk now about Fannie Mae and Freddie Mac and how, and potentially, the Trump administration may not now be willing to give up control.
What?
I can't keep track. It's like you talk about volatility and whipsaw. Just look at what's happening with Fannie and Freddie. Ben Elliott joins us now. He covers the consumer for us for Bloomberg Intelligence. He's a consumer finance analyst. Ben, what is happening?
There's a lot of confusion out there, right? The administration is kind of talking past itself, saying a couple different things. But the reality is these companies are contractually owed, or do contractually owe Treasury $350. And essentially the optimism in the stock is that the government will just write that down. And if you know anything about the way the Trump administration works, they see potential for a windfall. They're probably going to capitalize on it. So it feels as though the optimism was always a little misplaced, and now people are kind of coming around to realize that this could be more complicated than it seems.
Yeah, as a markets guy, Ben, my just natural inclination is let's get these things into the marketplace and let the market value them however they will value it. What's the counter argument there? Why haven't they been coming? Why haven't they been brought to market?
Well, it's just because of the huge overhang of Treasury's ownership stake. It's not as simply sort of structured as some of the other financial crisis investments were. There's something called a liquidation preference, which kind of is rising every quarter as the companies earn more money. So basically, the government needs to decide what they're going to do with that stake. A lot of this has been litigated for over a decade. the Supreme Court has basically decided that the companies have not paid back the government, and so no new money really wants to buy into a gigantic multi-decade lawsuit with a $350 billion overhang. It's just impossible to say what the stock could be worth.
I just don't understand how the government can kind of sell its stake, but then also keep opinions. Like I don't, or even an implicit guarantee if it's not an explicit guarantee. I mean, it feels like there's no gray in this, no?
Well, so there's a little bit of there's an existing backdrop which has a number on it, which is $240 billion. That Treasury still agrees they'll pay to the enterprises if they have a shortfall in their earnings. So the idea is you could release them, maintain that backfall, and charge the companies a fee on an ongoing basis to earn money for Treasury. But the reality is $240 billion is not enough to cover unexpected losses. So then the implicit guarantee is that, hey, it's not $240 billion, it's whatever they need.
All right, I guess we will kind of wait and see like everybody else, Ben. Just a lot of uncertainty out there, as you were mentioning before, about what the government ultimately wants to do with its stake in Fannie Mae and Freddie.
Oil is definitely moving here. It's trading at 63.85. So we may see a test on the 64 level here. And UCO ETF is trading at 21.945. We're going to go to a video by Fox News. They were interviewing Newt Gingrich. But before we do that, please go to my store, the-studio-reykjavik.com, and get the lozenges and drops that I have. YouTube gave me strikes because they don't like what I say. And also get the gel. They don't like what I say on that too. So help support the work that I do. And go to my store, the-studio-reykjavik.com, and get this dual purpose product. It's olive leaf extract. It will help to bring down inflammation. That's good for your vascular system. That's also good for your immune system. But olive leaf extract will help to bring down LDL levels and increase your HDL levels. Why is that important? Lower LDL means less LDL that's oxidized. Less LDL that's oxidized means less plaque formation. So please go to my store, the-studio-reykjavik.com, and get the olive leaf extract. Take it every day. It's a dual purpose product. Use discount 5 and you get $5 off any order. Now, if you're 40 years of age or older, you need to start taking vitamin B complex. Why? Because B1, B2, B3, B4, the first 4 B vitamins helps the mitochondrial health. And that means your ATP is going to go up. You'll have more energy, more cellular energy for your cells to work properly. Also, vitamin B complex helps with cellular metabolism. So the cells will function properly. And when you do this, your tissues will perform better. And then your organs will perform better. That's how it works. Now, vitamin B complex also has vitamin B12. And B12 is important for neural health. So if you get older, you need to start protecting those neurons. And you're going to start hearing in the news, about people having problems with gait, having memory issues, concentrational issues. You need to keep those neurons healthy. So please go to my store, the-studio-reykjavik.com, and get the vitamin B complex. Drink it with filtered water.
And way higher than that, 20, 30%. I'm like, really? I mean, I understand that. I was just surprised that a kind of a registered investment advisor with individual wealth clients would maybe take that much risk, that much liquidity risk. What are the conversations you have with the wealth managers these days?
Well, I think I would almost say there's 2 strands there. There's your more
the institutional investors screwed up and they didn't buy into the dip because they were fearful. They hated Trump. They don't like the idea that America is going to produce something.
Allocation, especially for large institutional asset owners. When you get more to the wealth space, it is growing considerably, but off a much, much smaller base. And that is ultimately, again, for, diversification, for yield. And when you just think about, too, the amount of private companies, we had a stat early this morning that said that something like 80% of companies that make $100 million of revenue or more are now private. That is a whole area that really has to be open to more retail type of investors. And obviously there's a lot of conversations, and we can really help do that as we start to launch more registered funds that actually have the liquidity profile that is probably more suited to a retail type investor in the wealth space.
Isn't that counterintuitive though? Like, I want alternative investments and you're taking on the liquidity risk because you're getting the returns. If you make them more liquid, doesn't that wind up negating the whole point?
Well, certainly an advisor has to be very educated in terms of understanding and balancing the risk associated with any type of investments and portfolio strategy that they're constructing on behalf of a client. But these new types of wrappers, interval funds, etc., actually do have the liquidity profile. They're registered vehicles, so they have a different liquidity profile than you would normally see in the private fund space that really was suited more towards institutional investors. And that's where a lot of the innovation is happening, because you are right, liquidity is a key concern, and that is actually the holy grail. How do you create strategies and the right wrapper that actually provides for the right liquidity profile for retail style investors?
ETFs have been one of the greatest, most amazing developments in financial services that I've seen in my career. How's it impacted your business?
Well, ETFs certainly are. They're one of the many products that are continuing to grow at pretty much double-digit pace. Whereas before, ETFs were very much more for passive investments. Now, actually, where all the growth is very much on the active front. And also, what you're really seeing there is buffer strategies and other types of strategies where you're using derivative overlays, etc., to actually customize those ETFs for different types of returns and different types of strategies that individual customers are looking for.
Amazing. All right, Emily, thanks a lot. We really appreciate it. Emily Portnoy is Global Head of Asset Servicing over at BNY. Just so fascinating on how the change is happening there. Much more coming up from this conference, but we're going to keep you updated on the news of the day. We're going to go to Mandeep Singh next, Bloomberg Intelligence Senior Tech.
When I was doing managing the portfolio for Catholic Charities, BNY was the custodian for the different accounts that we had. So I know a lot about BNY, Mellon. All right, so please go to my store, the-studio-reykjavik.com, and make sure you get the gels and the lozenges and drops. You know why? Because I got strikes on YouTube because they don't like what I say. So help support my work and get those products that YouTube doesn't like what I'm saying. Please go to my store and also get the ubiquinol. Ubiquinol is the most bioavailable form of CoQ10 that you can buy. If you're taking ubiquinol, most likely you're taking the wrong kind. I'm sorry, taking the wrong kind of CoQ10. Ubiquinol is the most bioavailable form of CoQ10 that you can get. So if you want to take CoQ10, you want ubiquinol. But most people that are taking CoQ10 are taking the wrong kind of CoQ10, and it's less bioavailable. So you want the high bioavailable CoQ10, all right? And that's ubiquinol. So on my store, I have the best that you can get, all right? You can't get anything better. So please go to my store and get the ubiquinol. Now, it's important because it's an antioxidant. It's going to soak up free radicals. It helps the health of the mitochondria, so it's going to have more energy. But it also helps to protect neurons. Very important, especially if you are 40 years of age or older. I can't say this enough. We are going through, as we age, increased risk of issues with gait, memory, concentrational issues. You need to protect those neurons. Now, if you stack and take these supplements, then what you're going to notice is that you can sleep better, your concentration's better, your memory is better, your focus is better. All right. And when you improve your kinematics by exercising, improve your blood flow by cardio exercises, when you learn new things, you're going to have better neuroplasticity. So it's really important to view this as a holistic way. But neural health is super important, especially in the aftermath of 2020. Super important. So is immune system. And I'm telling you ways to boost up that immune system and also how to improve the health of those neurons. Neural tissue is extremely important in the aftermath of 2020. Okay? Now, I have to be careful on what I say because YouTube doesn't like what I say. So I have to walk on eggshells, I have to pivot and dive and, and do all these things to inform people on what I do to improve my health and wellness. Another great supplement that I have, that I take every day, is NAD+. NAD+ stacks well with ubiquinol. Now again, ubiquinol is the most bioavailable form of CoQ10. Most people that are taking CoQ10, you're taking the wrong type. You want the ubiquinol, all right? Because it's the most bioavailable. It's going to help with your neurons. So NAD+ boosts up energy levels. NAD+ also helps to repair DNA damage, cellular DNA damage, and mitochondrial DNA damage. And also NAD+ helps to protect neurons. It stacks well with ubiquinol. It also stacks well with C60 because C60 is a strong antioxidant. And when you soak up free radicals with antioxidants, you're reducing stress on those cells and those neurons. So it behooves you to listen and take ubiquinol and NAD+. And again, make sure you buy the lozenges and the drops and the gel because YouTube doesn't want you to do that.
This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Victoria's Secret says a security incident that caused it to shut down its e-commerce site may hurt results for the current quarter. Victoria's Secret was expected to report earnings this week, but now says it's delaying the release of results because employees are unable to access some information. Shares of Victoria's Secret, right now they are up by 2%. Again, recapping, S&P best level of the morning, up now by 0.4%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks a lot. Really appreciate it. Alex Steele and Paul Sweeney here at BNY Insight 2025. We are in Maryland, right at the National Harbor at the Gaylord Convention Center, as we have a lot of financial advisors kind of coming together and discussing ideas and how to manage asset and wealth management for 3 days of learning experiences and networking solutions as well. Really been a fascinating time so far. Keeping an eye on some of the equity moves. One is Meta and Constellation. Constellation Energy is up a little over 0.5%. Meta's down by 0.6%, but Constellation Energy agreed to sell power from an Illinois nuclear plant to Meta Platforms. It's a 20-year contract starting in mid-2027. So Constellation is going to boost its own investment into the Clinton plant's output and maybe will actually build another reactor at the site. I did the energy angle. Let's get the tech angle now with Mandeep Singh, Bloomberg Intelligence Senior Technology Analyst. Okay, Mandeep, why does Meta need this?
Well, if they're raising their capex, which they did in their last earnings, that capex is going towards, getting more AI chips. And, if you are putting more AI chips, you need more power. So clearly, that is where the shortage is right now. And look, if this is an AI super cycle that we all believe it is going to be the case. And I think you will see a power super cycle as well. And in this case, all the hyperscalers will be looking to procure power for their data centers. I mean, Meta serves over 3 billion monthly active users across their family of apps. Now, granted,
now let's get this straight. Zuckerberg needs to fuel his AI for computation with a nuclear reactor. That sounds really safe. Now, if he screwed up the metaverse, screwed up Oculus, screwed up Facebook, why don't we assume that he'll probably screw up the nuclear reactor too? And have you ever listened to him talk? There's something seriously wrong with that dude. All right. Best and the brightest. He got into Harvard. Best and the brightest, really? When he was being interviewed on Joe Rogan, he literally talked like a retard. Someone that was retarded. Incoherent, didn't really, it just like there was something wrong with him. Now, do you really think that he reads a lot? There's something, just something weird about him. Now, maybe it's all those years of coding, but now Meta needs a nuclear reactor, and we're supposed to feel safe.
A knowledge graph, it is about the entirety of how they run their infrastructure, and that is what is a long-term mode, because nobody else can operate at the scale at which these hyperscalers are operating right now.
This is a fun fact in the article by Will Reid.
Here's a fun fact. You got a lot of these people that are coming from Silicon Valley, part tech, they're pushing, climate change and blah, 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 and they hate fossil fuels. Now, yes, I'm biased. I make money on fossil fuel, all right? I buy oil, all right? And if I could eat it for breakfast, I would, all right? But the thing is, when you do a ChatGPT search for something, it takes 3 times the amount of energy compared to a regular Google search. So if you do a AI generation for just searching the web for information, you're spending 3 times more energy. So Silicon Valley has been saying one thing out of their one side of their mouth and saying another on the other side of their mouth. They're saying to the public at large, you got to be worried about climate change and curtail your carbon footprint. All right. Meanwhile, they're building technology that's using up more energy. And no one's talking about this. You chat GPT, you're spending 3 times more energy versus a regular search engine on Yahoo, DuckDuckGo, or Bing or whatever. Those are the facts. And then on top of it, they need all of this money and build out and energy to run the LLMs, to train the models. Not just to do the search, but to train the models, even more energy. That doesn't sound like they really care about the planet, but they want you to pretend that they care about the planet. So if you try to reduce your carbon footprint and drive EVs, and then all of a sudden, let's say your society is carbon neutral, all right? Which it's not, but let's just say in a perfect world, your city is carbon neutral. You're doing everything right. Then all of a sudden, Mount Etna blows up, and all of that ash and all of those volatile gases are up into the atmosphere. And all of that carbon neutral savings has been flushed down the toilet for decades. This is why, if you're conservative, you need to push back on stupid people or push back on people that are trying to take advantage of you, like Mark Zuckerberg. Now, something unique about Mark Zuckerberg, he's taking advantage of you and he talks like a retard.
Of keeping them idle or not being able to utilize them 100% is way higher than anything you are spending in terms of, the energy deal that they had. So clearly they are focusing on utilizing the chips that they have already procured, and that's why they are proactive with, these power deals.
All right, Mandeep, thanks a lot. Really appreciate it. Mandeep Singh joining us, Bloomberg Intelligence Senior Technology Analyst. Also, power growth has been 1 to 3% tops for decades. And then going to 7 is crazy. It doesn't sound like a big number for tech guys, but for power guys, it's nuts.
But I'm just observing what we've been talking about more and more and more this year has been nuclear power.
Well, because it's already there.
Okay.
You can just expand it, or instead of shutting it down, you keep it running. And it's something similar that we're seeing with coal versus picks and shovels in the ground. We're not building a new nuclear reactor yet.
Okay.
We haven't gotten to that point. We got some interesting data out. We got factory orders for April coming in a little bit light. We also got jolts. Want to get more on this with Michael McKee, Bloomberg International Economics and Policy Correspondent. Hey, Mike, what's my takeaway from these numbers this morning?
Not much. We're kind of where we were and have been. There are more job openings, or there were in April, it's 2 months ago now, than anticipated, which means it may be a little easier for people to get jobs if those are accurate numbers, which there's a lot of doubt about with the JOLTS numbers. So it doesn't really tell you what's going to happen going forward is the issue. Factory orders, we know that the businesses have cut back on spending, but it really hasn't shown up in a huge way yet, and that's just starting to make its way into the data. We're kind of at the last stand for the way we look at economic data. We're in the last weeks of the untariff tainted data, and it should start to show up soon. So the question is going to be, how bad is it going to be?
Yeah, I mean, again, you helped us understand that.
I don't think it's going to be that bad.
The layoffs level higher, that's not good if I'm an employee. But the quits level is lower, which is if I've got a job, I'm not quitting and looking for something better. So put those two together, and it kind of suggests maybe a little bit of softness in the labor market.
Yeah, it does. It suggests that we are seeing more caution, on both sides of the hiring equation. Companies are starting to let people go. We've seen some announcements of that in recent weeks that wouldn't even be captured in this. Disney yesterday, for example. And we're seeing the caution on the part of people who don't want to quit their jobs now because they're a little nervous about finding another one. The question with the job openings always is, are those real openings or are they multiple openings because companies are just trying to throw out, ads to try to attract resumes without really planning to hire somebody? So there is some question about whether we should worry about a rise there or not.
Mike, how important do you think the jobs number will actually be on Friday? You said that we're just starting to get the last of the clean data, right? Are we going to have to wait until the July reading for June to really get deeper into the jobs number here?
Oh, I think so. If we get anything like the forecast 130,000, it'll tell the Fed that the economy is slowing down, but it won't suggest that the economy has started to seize up or anything like that. It's been part of a trend that the economy is creating fewer jobs. And actually what we've seen is in the last couple of months, numbers come in better than forecast. But it's the unemployment rate that the Fed is really going to pay attention to. And that's where the JOLTS numbers could figure in. I mean, again, they are 2 months behind, but the unemployment rate isn't going to go up as fast if when people lose jobs, they can find other jobs. So it's kind of a puzzle to put it all together going forward. But I think you're right, Alex. We're not really going to have a definitive picture of the labor market until we get into July or August even.
Right. All right. Something to look forward to, I guess. Michael McKee, Bloomberg Economics guru, giving us the latest breakdown on some of the economic data we had today. Coming up, Jim Crowley, global head of BNY Pershing, on the future of wealth management. He's going to be on site here at the BNY
let's listen to Newt Gingrich from Fox News.
I want to give Spartan a try, but I feel it's too expensive.
We hear you. And this holiday, we decided to drop the prices as low as... So here we go. California Governor Gavin Newsom doing what liberals won't, bringing Republicans on his podcast. Is it a genuine attempt at bipartisanship or a training ground for 2028 debates? That's what our next guest asked him.
2028, President Vance,
President
40%.
Vance probably runs against Governor Newsom. Or Vice President Vance runs against
Vice President Vance.
I look at some of your other candidates. I mean, the governor, with all due respect, the governor of Illinois as a presidential candidate, give me a break.
I'm not getting in the middle of all this.
You can
Unbelievable.
Say nothing, but I would not be at all shocked to have a Newsom Vance general election in 28.
Well, we'll see. Fox News contributor, former Speaker of the House, Newt Gingrich, joins us now. He's got a brand new book out. It's 44th, called Trump's Triumph. We're going to get to it in a second. You went on that podcast. What are your thoughts going in? Were you impressed with what you heard? Because the report card is not good for Gavin Newsom.
Look, I've known Newsom for years. He wrote a brilliant book called Citizenville back when he was mayor of San Francisco. I mean, his biggest problem is California. It's a total disaster. But it's also the biggest state. So if you're talking about Democratic primaries, he's formidable. But I did it in part just for the heck of it. I mean, he's a very smart, very agile guy with a terrible record.
Right, with a terrible record, and he has a chance to correct in this last year, and he's not doing any of it.
He can't change it.
Right.
He can't take on Sacramento.
Right. Well, you could say that I'm just going to end it and say I'm going to enforce the border. I'm going to crack down on illegal immigration. I'm going to keep women. I'm going to keep men out of women's sports, and then see where it goes.
He wouldn't get out of Sacramento alive if he did that stuff.
So what? But if he wants to go to Washington, that's who we need. So who do you think is formidable outside Newsom? Kamala Harris, according to the Washington Post, weighs a run for governor. Some Democrats are moving on. Do you think that she could be a legitimate governor?
I think every Republican who can should do all they can to keep her propped up. Because she's a disaster.
She is.
I mean, she represents the Obama-Biden tradition of left-wing incompetence.
So let's talk about your book, Trump's Triumph. You saw it up close and personal. You're a key advisor. There's very few people in politics that he respects more than you. What did you see?
I saw enormous courage. I mean, this whole recent thing about Taco, Trump always caves. It's just nuts. Here's a guy with the courage to run against 16 guys. Here's a guy with the courage to endure the CIA and the FBI with the Russia hoax. He endures 2 impeachment attempts, a rigged election, 2 assassination attempts, 4 efforts to put him in jail. And his critics think that he always caves. My experience is he almost always wins.
It doesn't track. Let's just talk about this. Here's an excerpt from your book about we think best exemplifies the type of message you try to put out. Candidate Trump instinctively knew he had to have a great thing to communicate. He concluded that it was to make America great again. When as a marketing, it translated into MAGA hats, MAGA t-shirts, MAGA bumper stickers, MAGA signs. Suddenly a big idea was born. Candidate Trump became the leader of a movement far bigger than himself. You saying he grew into this movement? He realized
the movement goes all the way back to Goldwater, and people can still go to YouTube and see Reagan's time for choosing speech from October of '64. That movement has been growing ever since as people get disgusted with left-wing big government. And Trump comes along. The genius of Trump in part is he doesn't put out buttons that say Trump. He doesn't put out hats that say Trump. He identifies with making America great again, which is probably as powerful a term as you can get in the American political system. And the result is, he beats 16 Republicans in order.
Then he just beat a good field again.
Yes.
Nikki Haley, Governor DeSantis.
Well, he beat the second field without even showing up. I mean, by then he had become Trump. I mean, I'll never forget, Clifton and I were at Luther College in Decorah, Iowa. She was being honored for Lifetime Achievement. We're walking down Main Street. This is in 2019. And there's a store. I'm sorry, it's in 2023. There's a store. It's Trump. It's a local group, not part of any campaign, spontaneous, because Trump is now personified for at least half the country that he is the future. If we're going to have a healthy, safe, prosperous America, it's going to be with Donald Trump.
Do you realize that Joe Biden thought he'd make it a negative, MAGA Republicans, and it just blew up in his face? Now MAGA is embraced. He tried to make it a scarlet letter.
At the risk of showing my age, we did polling in 1983, getting ready for the Reagan reelect. The strongest term in American politics is America, at about 93 or 94%. The second strongest term that year was gunboat diplomacy, which was 1% weaker, but was what people thought of as also as America. So when you take on America, and this is what the left is discovering, when AOC's out here hating America, she's isolating herself from about 85% of the country. And
she doesn't realize that because she gets a big crowd in Idaho. But you know what I love about this? You take your perspective, your knowledge of politics, your love of history, and your knowledge of the president, a historic figure, and it all is in your book, Trump's Triumph. Congratulations, Newt.
That was great fun.
Book 44 will be a big hit, and I'm sure 47 will be happy.
We'll see.
All right. Thanks, Mr. Speaker.
I'm Steve Ducey.
Please go to my store, the-studio-reykjavik.com, and make sure you get the lozenges and drops and the gels, because I received 2 strikes from YouTube because they don't like what I'm saying. So please help support my work, all right? Use discount 5 and you get $5 off. Now let's talk about another product that I have in my store that you should be getting. Toothpaste. Now, hopefully I don't get a strike on YouTube for this. You need toothpaste, all right, to brush your teeth. But this toothpaste is a very high quality toothpaste that will whiten your teeth, freshen your breath, help with inflammation at the gum line, and with good gum line health, you're going to have just your overall hygiene is going to be better. And with good oral hygiene, that's going to help with the vascular system and your valves. So please go to my store, the-studio-reykjavik.com, get this toothpaste, get a few tubes of this toothpaste from my store, use discount 5, and you get $5 off. Now, I also have a great stack that I do every day, and that's D3 and K2. It's the MK7 molecule, all right? It's the K2 MK7 molecule. So what you want to do is you take them together. D3 is a gene expression cofactor, all right? And it will also help to absorb calcium and get cells to go into apoptosis when they need to go into apoptosis. So D3 is really important. Now, if you stack it with the K2, you're able to absorb that calcium better. And if you take magnesium, the efficacy of D3 improves. Now, by absorbing calcium, that's going to help your bone density. Because what happens is if you do resistance training, taking calcium, take the D3 and the K2, and have magnesium in your supplementation or your diet, and you're doing that resistance training, you're improving the strength of your bones. That's really important as you get into your geriatric years, because when you start getting older, you start to have osteopenia and osteoporosis, and that's just bad. You need to do resistance training, build up better bone density. All right, so that's really important. And also, D3 and K2 can help to pull some of that calcium out of the plaque formation at the vascular level. So please go to my store, the-studio-reykjavik.com, get the D3 and the K2. Now, again, I have 2 types of gel. I have it in the tube form and also in the easy dispenser form. It's a dual purpose product, all right? And YouTube doesn't like it. So please go to my store and get these products. It's dual purpose. You can use it as skincare. You can put it on a wound that helps to heal the wound quicker. You can use it as an aftershave. And if you're not feeling well, or someone around you is not feeling well at work or at home, put it on your hands, around your mouth, around your nose, around your eyes, around your ears, stays active for 5.5 hours. Please go to my store, the-studio-reykjavik.com, and get the gel. Now, YouTube doesn't want you to do that. They give me strikes when I talk about the gel. And also, YouTube gives strikes when I talk about drops and lozenges. Please go to my store and get the drops and lozenges, just for the very fact that YouTube doesn't like it. But get it. It's what I take. All right. I have 3 different flavors for the drops. I have it in blueberry, also in cherry flavor, and honey and lemon. Take the drops. You get 100 in each bag. Buy a few bags for your household. And I also have the lozenges, which are larger. And you get 21 in each bag. Really important. Mitigate that irritation in your throat for whatever reason. Maybe because it's the time of the year or whatever. But mitigate that irritation right away. Please go to my store, the-studio-reykjavik.com. And again, get the gel and get the lozenges, because YouTube doesn't like that. YouTube wants to give people strikes when they talk about things that you need.
AI, does he then like not learn the correct muscle, or does AI just help leapfrog him to a different place?
I think it helps leapfrog, and we all have to sort of obviously be very cautious and think through how we're using AI and keep helping the models learn. We've been talking about the art of the prompt being a new skill that everyone has to learn. Young people understand the art of the prompt.
What's the art of the prompt?
The art of the prompt is the questions that you would ask AI to get the response.
I see. Okay.
So to get the output that you want. And so the better the prompt, the better the response.
What's the biggest headwind for your business going forward? Is there anything structural that kind of keeps you up tonight, or is it just managing the day-to-day like we all do here with the news flow?
Yeah, look, we talked about trust earlier, right? Trust takes years to build and a moment to lose. So it's the day-to-day, keeping your head down. You can't lose sight of the details. We call it being molecular at BNY. You really have to understand the details of how things work. And at the same time, sort of like continue to sort of take a look at what's on the horizon and what's coming next. I talked about private assets. We're talking about meeting with clients the last couple of days. The interest in private assets and how that sort of gets integrated into the custody platform is something that sounds so simple, but really not that simple.
Yeah, we were talking to Emily about that and how the wrappers have changed and how then the offerings have changed. In that area, what's the thing that's most interesting for you?
Creating scale. How can we help our clients sort of grow?
All right, so we're going to move on to the news here. America will have a lot to celebrate if the Senate makes this move, says Representative.
Well.
Welcome back. President Trump calling on House and Senate Republicans to pass the big, beautiful bill quickly, get it to his desk before the July 4th holiday. He calls this an historic opportunity, and on Truth Social, he writes, "We will take a massive step in balancing our budget by enacting the largest mandatory spending cut ever, and Americans will get to keep more of their money with the largest tax cut ever, and no longer taxing tips, overtime, or Social Security for seniors, something 80 million voters supported in November." The House Freedom Caucus, meanwhile, is demanding a vote on the first White House rescission package coming today, which could not codify $9.4 billion in DOGE cuts. Joining me now is Missouri Congressman and the chairman of the House Ways and Means Committee, Chairman Jason Smith. Mr. Chairman, great to see you. Thank you so much for being here this morning.
Great to be with you, Maria.
Can you give us a sense of what you're expecting to come out of the Senate? What is your reaction to this pushback from Senators Ron Johnson and Rick Scott and Rand Paul about the cost?
First off, let me say that in the House, we have the very same same differences that the Senate has, and that is we started the process knowing that there was a couple people that would be hard to ever get to a yes. I believe that Chairman Crapo, Leader Thune has that same instance over in the Senate. There's a couple senators that will never get to yes. They can only lose 3 in order to pass that. In the House, we could only lose 3. What I will say is that if you vote against the bill that we passed out of the House, the one big beautiful bill 12 days ago, you will be voting for the largest tax increase in the history of America on every single American. You will be voting on $0 in spending cuts. The bill that we passed out of the House had $1.6 trillion of mandatory spending cuts, the most spending cuts in the history of this country by more than 400%. If you vote against this bill, you're voting not to secure our border. And if you vote against this bill, you're not voting to cut regulations. So I hope every senator over there does the right thing and deliver for the 77 million Americans that made sure that they had the Senate majority.
No, I think this is a really important point that you make. And I think that the way you phrase it is right. And that is what you're doing is trying to stop the largest tax increase that we've seen. So, stopping the taxes from going higher is important on so many levels, not to mention the markets and the economy. But Mr. Chairman, now that we're still in the quote unquote sausage making phase and they are looking for other areas to cut, what do you believe could be realistic in terms of the Senate beefing up the spending cuts? I mean, as you have the CBO projecting $22 trillion in a 10-year deficit, $2.2 trillion a year, and something like $60 trillion in debt by 2035. I mean, are there areas that you believe the Senate could make this better?
Absolutely. I encourage the senators to make this better. I've seen senators on your shows over the weekend say that we need to cut trillions of more dollars. I'm all about cutting, but you know what? You need to make sure as a senator that you can get 50 other of your colleagues to join with you. You have to thread a needle. You have to balance it. If you can get more spending cuts, more power to you, and I would love to that. We provided $1.6+ trillion of cutting. In the Ways and Means space, Maria, we cut more than $1 trillion. $1 trillion of bad tax policy, including more than $500 billion gutting the IRA and the Green New Deal scam. So it can be done. If the senators think they can do better, great. I love to see them deliver it, but they have to have 50 votes in order to deliver. They need to carefully thread that needle and balance it. But failure is not an option. The American people will not stand for that.
Well, because you're also threading a needle in the House. I mean, look, Ron Johnson said that he's working on a report and he's going to have facts and figures in the report because that's what's missing in this debate. And you're right, that is what's missing in this debate. Let's hear specifically what you want to cut and how much it's going to cost. Because if you're going to cut things that were just voted on in the House where you had to wrangle people to get their yes vote, they're going to say, well, wait a second, this is not the bill that I thought it was. Now I'm a no vote in the House.
Maria, people don't want reports. People want action. It is go time. We have hit the rubber to the pavement. The Senate needs to, if they want additional cuts, name them, get the votes, and send it back to us. If not, help us deliver the largest cuts in the history of America by 400%. $1.6 trillion. You were talking about the DOGE cuts earlier of $9 billion. $9 billion. What we cut 12 days ago was $1.6 trillion. And people are complaining about that.
Yeah.
If we do not pass this bill, there will be 0 cuts, Maria.
Yeah, no, I know. And that's why I made the point earlier, okay, rescission package is fine, nice, but it's not going to really, it's not going to move the needle in terms of what you're doing. But Ron Johnson came up with another idea, which of course has been sort of looming in the background the whole time. And that is put President Trump's campaign promises of no tax on tips, no tax on Social Security, no tax on overtime in a second bill later on in the year. Here's what the senator said to me on Sunday. Watch this.
The socialists are at the gate, and Zohran Mamdani is leading the pack. If they take over New York City, this is what they said they will do.
Do you think this is doable by the end of July and get the bill passed?
Yeah, if we split this thing into two parts, border defense, take what spending cuts that we've already identified, bank those, extend current tax law, take an automatic tax increase off the table, increase the debt ceiling for about a year. By the way, that'll be a shocking amount, about $2.5 trillion just to get us into March of 2026. That ought to tell people we better fix this.
So there you go. He's talking about two bills. Then I spoke with Mike Rounds the other day. He said, well, we could do it in three bills. So this is not what the House voted for, Mr. Chairman. How would that fly in the House if the Senate came back to you and said, well, we want this in two bills?
It would be dead on arrival, Maria. The ship has sailed. President Trump has said one big, beautiful bill. I hope every Republican senator will not stand in the president's priorities. This is the fastest and quickest approach to deliver all of the campaign promises that Trump promised 77 million Americans that sent him up there. Permanency of the expiring Trump tax cuts, no tax on tips, no tax on overtime, tax relief for seniors, lower tax rates for products produced in the United States. That's all in this bill, but we're also securing the border, cutting regulation, and we're also creating the Golden Dome, protecting the United States. It is a dream bill of Republican priorities that we're going to deliver, and it better not be stalled in the Senate by random senators saying, let's do 3, 4, 8 bills. We got one bill. Get it on the president's desk by July 4th, and the American people will have a lot to celebrate about.
So we're going to talk with Palmer Luckey in a few minutes about the Golden Dome and what this means in terms of all the spending on defense. Our audience loves it, and we are going to get into it. But let me get your take on this, because one measure in that big, beautiful bill takes aim at foreign investors. You say it's a way to keep other nations in check. What can you tell us about this?
You know, unfortunately, the Biden administration a couple years ago entered into an agreement with numerous other countries through OECD that would suck away $120 billion of profits from U.S. companies. U.S. companies, it was going to suck away. So this provision is a countermeasure to those countries, because on the first day in office, President Trump did an executive order rescinding that agreement and telling those countries they need to respect our tax code, including our global minimum tax. And if they don't, the language that we have within this bill, we will countermeasure with tax increases on their businesses.
All right. We will be watching all of this and certainly talk with you along the way. Mr. Chairman, great to see you this morning. Thank you, sir.
Good to see you always, Maria.
All right. Congressman Jason Smith.
Please go to my store, the-studio-reykjavik.com, and get the collagen. The collagen is a dual purpose product. It's going to help with your skin, your nails, your hair, but it also will help with your musculature, your bones, and your joints. Take it every day. You get a big scooper. This is a powder. You take it once a day. It's a month's supply. Mix it with soft foods, filtered water, a smoothie, or even milk. Please go to my store, the-studio-reykjavik.com. Get the collagen. Also, I have very high quality soaps. You can get it in lemongrass, charcoal tea tree, lavender, and peppermint. So please go to my store, the-studio-reykjavik.com. Get a few bars for your household, help support the work that I do. And again, share the links. Make sure you subscribe to the channels, because YouTube likes to give me strikes. So please help support my work by purchasing the products and making sure you subscribe to all the channels I have. I have 4 channels on YouTube, Brighteon, Bitchute, and Rumble. All right, let's listen to CNN. They're demonizing Trump's policies on tariffs. So they're demonized. They're going to say that the world is ending because of tariffs.
A key group of the world's 38 most wealthy nations sharply downgraded its current year growth forecast for the United States, going from a forecast for 2025 of 2.2% growth projected to now just 1.6% growth in March. The group adding further dismal projections for the future, and they expect the global economy to slow markedly both this year and next. A big part of what decides that, the currently stalled trade talks between the United States and China. Those negotiations are a huge focus as well for one industry in particular, footwear, calling tariffs an existential crisis and trying to hold on to hope from recent comments made by President Trump like this.
We're not looking to make sneakers and T-shirts. We want to make military equipment. We want to make big things. We want to do the AI thing with the computers and the many elements. But the textile, you know, I'm not looking to make T-shirts, to be honest. I'm not looking to make socks. We can do that very well at other locations.
Joining me right now is Matt Priest. He's the president and CEO of the Footwear Distributors and Retailers of America, a leading footwear trade group that represents dozens of companies like Nike and Crocs. Thanks for being here. We've kind of been checking in with you throughout, from before all the tariffs were imposed to all throughout this very long and not yet there journey. You sent a letter to the administration about those remarks, applauding hearing that the president isn't interested in maybe pushing you to try to manufacture, companies to manufacture in the United States right now, and asking for an exemption for the footwear industry from the reciprocal tariffs. Have you heard anything back?
We've not heard anything back, Kate, but this started a process back in January where we asked the president to exempt us. We've been concerned about these tariffs. We paid billions of dollars in tariffs anyway, right? We have for 100 years. So for us, we wanted to encourage the president, as he made that statement, that yes, the policy should actually line up with the rhetoric. Stop tariffing and taxing Americans on shoes and socks and T-shirts, as the president said, and focus more on those strategic industries.
Look, I mean, the fact of the matter is tariff rates have not changed, right? They're still on. They're still hitting the industry and going to hit the industry. What happens if you do not get the exemption? What happens in the industry?
Costs will go up. This is an inevitable fact. In fact, we're here this week at a big market week in New York. We have this every 4 times a year. All the conversations, Kate, are around what are we going to do for costing for products sold in 2026? And no one knows. None of our brands or retailers know how they're going to be able to price goods in this environment when you're not sure what the tariff or the tax at the border is going to be. Is the uncertainty worse, or is the tariff rate worse? The uncertainty is typically worse. Now, when you're at 145, 154% tariff, which we saw just a few weeks ago, that's an embargo. So that's obviously terrible. Yeah. But if you're just not knowing where the tariff rate is going to land between 30%, 15%, 10%, then that uncertainty makes it very difficult to understand how to cost those goods. Have prices gone up? No, prices have not gone up right now. In fact, we're in this era where they're pretty muted. And that's our big concern, is because even with prices not up at this moment, because the tariffs haven't had a full impact on the cost of goods, our consumers have pulled back. And so we see declining sales. So our concern is that as prices go up, that's going to tamp down on consumer demand. And so what's going to happen when those prices do go up, particularly at back to school and holiday? So that's becomes a big question, right? I mean, let's ask this in kind of like in 2 buckets. What this means for American business, American footwear companies, and what this means for the American consumer. If nothing changes, and that's the only thing you can work with when it comes to reciprocal tariffs, what is that going to mean for anyone who is out there shopping? In the letter you mentioned that I would read that the average American spending on average $30 to $50 when they're in buying shoes. Yeah. What is that going to mean for people when they're doing back to school shopping? It's going to be higher costs, of course. And the bigger concern, Kate, is this is on everything. So even if we think that we are recession proof as an industry, we know that because costs and tariffs have gone up on every single consumer good sold in this country, the discretionary income, right, the stretch of the dollar for the American consumer is going to start to shrink back. And so that's going to... What's the estimate that you're hearing from companies, from Nike to Crocs to, I mean, you represent all the big names in the industry. If things don't change, what is it going to go up by? I mean, I just had the CEO of Elf Beauty Cosmetics on last week, and they are planning on raising their products, each product by $1 starting August 1. What are you hearing? How much are companies saying they fear they're going to have to raise prices by? Yeah, so every company's different. They're all in a different part of our market, but in a general sense, we're looking 15 to 20% to cover. And so you think of multiply that across Elf products, footwear, toys, et cetera, that's going to have a compounding effect on the consumer.
You mentioned that you'd also said that this is an existential crisis for American footwear companies. How many companies are you hearing from that this could put them out of business?
A lot. And what the viewers need to understand, Kate, is that even if you're buying product at a big box retailer that you see as publicly traded and you think they're worth billions of dollars, a lot of the suppliers and vendors that sell into those markets, that sell brands that people know and love, are small family-owned businesses.
Why can't the companies eat the tariff like Donald Trump says you should be able to?
Because the margins are 2, 3, 4% at best. And so we have one company, New York-based, third generation, $1 million worth of goods every single month. Their duty bill used to be $60,000. It's now $360,000 a month.
That's mind-blowing.
It is mind-blowing. It puts it into perspective what the impact could be.
Matt, it's good to have you here. Thank you very much.
My pleasure.
Really appreciate it. Please let us know what you hear back. I'm sure we will also hear it from Donald Trump's social media if you hear back from the administration on this. Thank you. President Trump's new ramped-up tariffs on steel imports are set to take effect tomorrow. And the president is vowing to double the tariff in an effort to revitalize U.S. manufacturing. The decision sent steel stocks sharply higher to start the week. But there's more. CNN's Matt Egan tracking this one for us. What did the steel industry saying about this?
Okay, the steel industry is loving it, right? Because the president is essentially tripling down on using his favorite weapon, tariffs, to revive the Rust Belt. So we did see steel stocks skyrocket yesterday. We saw a 10% gain for Nucor, 10% gain for Steel Dynamics. Cleveland-Cliffs, 23% increase yesterday alone. That was the biggest one-day increase for that stock in almost a decade. And just to remind you of where we are on steel tariffs, because it's a little confusing, the president did put a 25% tariff on steel in February. And then on Friday, he vowed to double it to 50% starting tomorrow. And look, he's got a point here. The steel industry is certainly in decline, right? Production is down massively. Employment is down dramatically from where it was. This has really been very painful for a lot of communities. And look at U.S. Steel. It used to be the most valuable company on the planet. Now it's kind of a struggling afterthought in this modern economy. And analysts do say that 50% steel tariffs, if they stick, which is a big if, but if they did, that could encourage more steel production in the United States. But here's the problem. It's also expected to increase prices of steel. And the ironic part here is that there's more people who work at companies that use steel as an input than who actually work in the steel industry itself. Obviously, autos is the big example here, right? And we saw auto stocks fall yesterday because they use steel and now their input costs are going to go higher. Former Obama economic official, Larry Summers, and Clinton Treasury Secretary, he's warning that these steel tariffs will backfire. Take a listen to what he said yesterday.
Net effect of this is going to be to destroy manufacturing jobs. The net effect of this is going to be to push up consumer prices, to make, for example, our automobile industry less competitive than it would otherwise be. This is ready, fire, aim kind of policy. It doesn't follow from any kind of coherent economic logic.
And given how volatile the tariff strategy has been, Summers also said he thinks it's extremely unlikely that this is really going to persuade companies to move production back to the United States. And we don't need to look back that far in history to see how this can go. Back in 2018, the president did put steel tariffs in place. And research does show that steel employment did go up, but only slightly, by 1,000. And look at this, manufacturing jobs at companies that use steel went down by 75,000. That's telling.
That's a graphic. That's something to pay attention to.
Right. And we don't know how it's going to work this time, Kate. But
we also don't know if they're going to stay in place. I mean, the uncertainty of it all.
For more than a few hours. We don't really know.
She's getting a little emotional about that on CNN. You notice that? Kate's getting a little emotional. She seems to not like Trump. Now, I have been in a situation with my career to have bumped into many of these people in New York. All right. Now, when I was at Catholic Charities managing their portfolio, I met almost every single major newscaster at the time at Fox News. including Judge Jeannie, all right? And she's actually a pretty funny person behind the scenes. Very, very short. But the thing is that I also, because of my affiliation with Harvard, have met a lot of different newscasters, anchors on both sides of the spectrum. Republican, but most of them are, you know, Democrat or Democrat leaning. A lot of them were CNN. All right. And I'll tell you, these people, they hate Trump. They literally, they wake up in the morning and they look in the mirror while they're brushing their teeth and they just keep on stating the mantra, we hate Trump, we hate Trump. And then they, you know, they go to work and it's just like this mantra, we hate Trump, we hate Trump. You know, and they're not even paying attention to what really the policy. If you put steel tariffs, all right, then what it does is it forces the suppliers. This is the reason why, to strengthen the USS, right? United Steel Steel Company, all right? So that allows us to sell steel, domestic steel, to our domestic manufacturers. It also helps us to be able to build our ships that we need for a Pacific war with China. We need to build more ships. We need lots of steel for that. Guess what? We're going to need lots of steel for missiles. We need lots of aluminum, lots of steel. We want it domestic. One, it's a national security issue. And two, when they were saying, well, if we put tariffs, think about the apples and oranges comparison that CNN was doing. They were saying, well, when there was tariffs before, and there was steel tariffs before, manufacturing jobs increased in steel production by about 1,000 or whatever it was. But in other industries that use the steel, those jobs were shed because of demand destruction of their products, too costly or whatever, right? The thing is that was just with tariffs. But when you actually have more investment, more foreign direct investment, helping improve the manufacturing output of domestic steel, that's a different game. Because by that investment, more steel would be produced at a cheaper price. See, if you make a lot of something, the piece cost goes down. But CNN didn't give you that little comparison. They only want to say what tariffs do. Well, what about Nippon Steel investing in U.S. steel? And making that steel here. What about that? When you have domestic production. Oh, we don't want to talk about that. We just want to wake up in the morning and just say, Trump is bad. Trump is bad. Trump is bad. That's CNN. I mean, CIA. Please go to my store, the-studio-reykjavik.com. The link is in the description of this video and all my videos. And get the omega-3. Omega-3 will help to bring down systemic inflammation. Omega-3 also helps with the stickiness of your red blood cells. So it'll reduce that stickiness. So that'll reduce clot formation. And omega-3 is really important to help with your lipid profile. By bringing down LDL and increasing your HDL levels, that helps with your vascular system. So please go to my store, take omega-3, improve your cardiovascular system. Really important. And another great stack that will help with your immune system and your cardiovascular system is taking the following stack. Turmeric is an antioxidant. Turmeric is going to soak up free radicals and bring down inflammation. It brings down pro-inflammatory cytokines. Guess what? When you do that, that's helping to boost up your immune system. And when you bring down inflammation at the vascular level, you're reducing plaque formation. And when you soak up free radicals at the vascular level, you're reducing plaque formation because you're reducing oxidized LDL. Now, ashwagandha root, really important. It brings down cortisol levels, and it also helps to control your blood glucose levels. So when you do that, you're reducing inflammation at the vascular level. And when you're bringing down cortisol, chronic cortisol levels, if they're elevated, is immunosuppressive. All right? Well, you want to reduce high levels of cortisol. That's why if you're stressed, you age faster, you get sicker, right? More often, whatever, right? You want to mitigate that. And to mitigate it, you control your cortisol levels. Go into parasympathetic mode, reduce that stress the best that you can, but also take the proper supplementation. And ashwagandha root does that. When you stack these together, you're helping your immune system and your vascular system. Please go to my store, the-studio-reykjavik.com. Use discount 5 and get $5 off any order. And by the way, make sure that you get the drops and the lozenges and the gels from my store, because YouTube doesn't want you to. Because they just keep on giving me strikes every time I tell you to go and get those products. Now, why that is, I'm not sure. Probably because it's really important to have. Please go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order.
Different names. So it clarifies what is a commodity versus what is a security. Yep. Most of the crypto world wants to be in the commodity space because then you're under the CFTC. Right. They have principles-based regulation as opposed to prescriptive-based regulation. Essentially, it's a little bit more innovative and a little bit less enforcement risk. Yep. And that's why this bill, which would actually give the CFTC authority over spot markets, is very much sought after. The challenge with the Clarity Act is that for all the headaches the Democrats were giving in terms of trying to get the Genius Act through, those headaches are even pronounced even more on the Clarity Act, because there was general bipartisan agreement that there is a regulatory gap, if you will, for stablecoins. Yeah. There are still a lot of people like Senator Elizabeth Warren out there that think that 1930s era securities law is good enough for the crypto world, and they're going to be much more difficult to get across the line. I think the Clarity Act doesn't get passed until next year.
Wow. How much of this has to do with the overhang of the Trump involvement, the Trump meme coin, the conflict of interest that we keep hearing has the potential to slow things down? But why?
Well, you don't want to give President Trump a win if you're a Democrat. I think that's partly it. I mean, also there is, within the stablecoin bill, there was a lot of push over illicit finance, KYC, know your customer, AML, anti-money laundering. Any of those types of issues or provisions, I think, can get resolved, especially under the Clarity Act. We're talking about KYC. I don't think KYC usually ultimately disrupts legislation. Right. But the idea for President Trump and his family being involved in meme coin, it's really difficult for policymakers to say that I'm going to support something, support a regulatory framework that allows individuals to put in their dollars when they see meme coins or other bad words talked about meme coins. Right. That makes it a little bit harder for policymakers to actually move forward.
There's going to be no Dogecoin in the National Reserve.
Well, and actually I think that was one of the most interesting things Senator is she said.
There's some breaking news here. Kuwait Wealth Fund joins Microsoft-backed $30 billion AI venture. Kuwait Wealth Fund joins Microsoft-backed $30 billion AI venture.
It's purchasing Bitcoin. That leaves the Ethereum Solana out. Maybe some of those traders aren't going to like that.
Wow. Producer James is very upset about the Dogecoin thing. We thought we were onto something. Bitcoin, by the way, up 1.5% over $1,500, holding well above $106,000 here. The idea of a national crypto reserve or exclusive Bitcoin reserve would inherently send this price higher, I assume. But what does the country get out of it? Why would we make this investment?
So when it comes to all three of these bills that we're talking about, one way to think about it is, are you looking at it through a retail trader, or are you looking at it through an institutional trader or an institution like Coinbase or Robinhood?
Okay.
If you're a retail trader, look, you want the United States to be purchasing Bitcoin. You want other people to be purchasing Bitcoin. As a result, the price goes higher. But if you're on Coinbase and Robinhood, the idea here is just institutional usage. The price is actually somewhat irrelevant for right now. The idea here is you want people to use more of it. So Washington tends to be looking at this through the eyes of just wanting to get more people to use this, the bipartisan folks between all these bills. It's not thinking about price. So on the retail side, if you just want something that's going to drive the price up, you may have to just keep your expectations in check, because Washington isn't exactly thinking of that method. They're thinking more about just getting the regulatory framework in place so that institutions and people can ultimately continue to start using it more and more.
I guess that would explain the price here. You running odds on reconciliation? There was a question for the senator at the end. They're going to be tinkering around with this bill in the days ahead.
Just to interject here, the S&P 500 is trading at 5,970. We're about 30 points away from the resistance level of 6,000.
Ceiling is included in this bill. And plus, I think the Senate can eventually come to an agreement. You probably won't get Senator Rand Paul. We saw President Trump tweeting him this morning. I don't think you may get Senator Ron Johnson, but you may get the moderates to come on board, because the idea that our thesis is that ultimately this is going to increase the deficit, because it's easier to borrow today for tomorrow's pain than it is to actually take a vote that's going to cut either Medicaid requirements, Inflation Reduction Act requirements, or SNAP benefits. It's much easier to just say we're going to increase the deficit. I think that's where the Senate goes.
Fascinating. Great and deep dive with Nathan Dean. Many thanks, as always, for the insights at Bloomberg Intelligence, our senior U.S. policy analyst. Having heard a fascinating conversation with Senator Lummis, nobody knows this stuff better than Nathan. So you just heard 80% odds. Does salt make the cut? There are questions about it right now. A lot of people seem to think it will. We're going to talk with a stakeholder coming up. Colin Allen of the American Property Owners Alliance is going to give us his view on all of this, and we'll ask him what's keeping him up at night. We'll also have an update from the North Lawn of the White House. Tyler Kendall with the latest on the big push for the big bill. First, the markets, though. Charlie Pellet standing by at World Headquarters in New York. We haven't heard from Charlie yet. How's it look?
Right now, looking very, very, very green, Joe Matthew. Just about the best level of the day, with the Dow, the S&P, NASDAQ all continuing to push higher. Traders driving stocks higher, as data this morning showed the labor market is holding up despite concerns about risks stemming from President Trump's tariff war. S&P now up at 5970, up 34 points, a gain of 0.6%. The Dow up 184, up 0.4%. NASDAQ up 171, up 0.9%. And to underscore, at or near session highs. The Bloomberg Mag 7 index up 0.8%. The Russell 2000 index is surging 1.5%. 10-year 4.45%. The 2-year 3.95%. Gold down 1%, 33.49 an ounce on the precious metal, while West Texas Intermediate crude up 1.7%, 63.59, and Bitcoin up 1.5% right now at 106,475 on Bitcoin. Earnings news: Dollar General slightly increased its annual guidance after the first quarter top projections. Stock is surging 14.1%. Coming up after the close of trading, we'll be hearing from Hewlett-Packard Enterprise and CrowdStrike. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Thank you, sir. Live from New York, Charlie Pellet, the voice of Wall Street and the New York subway. Indeed, I'm Joe Matthew in Washington. Thanks for being with us here on the radio, Bloomberg Radio, satellite radio, channel 121, and on YouTube, where it's a good time to dial it up. Bloomberg Business News Live. Just search Bloomberg Business News Live. You'll have our live stream there. And welcome if you're watching and listening on Bloomberg Originals. We have a lot to talk about because everybody's back in town today. We told you yesterday, fly-in day. Well, they're already at it. If you're John Thune, you had your feet on the ground here for about an hour before the phone started ringing. Donald Trump indeed hosted John Thune for a meeting at the White House yesterday, and he talked to a bunch of others too. The phone was ringing. Ask Senator Rick Scott. He came over in person. Rand Paul got a phone call. Oh boy. And a bunch of talk on Truth Social. You've been following the feed this morning? We're going to get to Tyler on this in a minute. Josh Hawley, Ron Johnson, everybody in touch with Donald Trump, who appears to be the ringleader here in the next phase of this debate. Yeah, this is what they call the big, beautiful bill, the BBB. Tyler toiling at the White House today and joins us from the North Lawn with the very latest on this. Tyler Kendall, the president seems to be obsessed with Rand Paul today, huh?
Yeah, definitely, Joe. And he's trying to ramp up the pressure on these senators who have said that they will withhold their vote on this bill unless they see some changes. Now, we know when it comes to Rand Paul, for example, perhaps his biggest point of opposition is that this bill will ultimately raise the debt ceiling. Now, we know that the House plan raises it by $4 trillion, but some in the Senate say that there's enough leeway here to raise it by $5 trillion. So there's already some tension there within the Senate when it comes to this. And it's really shows us the conflicting demands that this White House is fielding from senators when it comes to exactly what they want to see ultimately changed in this bill. On one hand, you have this group that are pitching themselves as those fiscal hawks, perhaps Rand Paul, also Senator Ron Johnson, who you mentioned did get a call from President Trump yesterday and says he has plans to meet with the White House's economic team. He wants to see some deeper spending cuts, has also raised concerns about how some of these tax priorities, like no taxes on tips or overtime pay, will they really incentivize growth? Now, we're not expecting those provisions to go away. That's something that the White House is pretty adamant about, but we've heard some Republicans say that they want to make those temporary provisions permanent. So there's really a lot to get into here. And Joe, as you well know, that push for some deeper spending cuts really goes against some of the top concerns from other Republicans that you mentioned, including Josh Hawley, when it comes to potential changes to Medicaid.
Yeah, Medicaid, a big one that we're watching. Of course, Tyler, SALT is as well. It's something that our audience is obsessed with. And there are a lot of questions about whether that SALT deal struck in the House comes back in the same form. Is the president weighing in on this? I notice he has no public events now.
There's a little bit of move going on in natural gas. It's now trading at 3.7, and oil is trading at 55.47. And like I said about 45 minutes ago, resistance level is 60, and the next, it just broke through the, it just broke through the resistance level of 55.28. So now it's trading at 55.56. So the next resistance level is 60. So like I said, natural gas and oil are big, they move quickly. So there's definitely action in the natural gas market.
Factories that are made in the U.S. that really go along with the White House's push when it comes to onshoring manufacturing and things like that.
Tyler knows this thing cold. I think she read all 1,000 pages. Beautiful day on the North Lawn. It's 80 degrees in Washington. How about that? Paul Sweeney's got a big day downtown, Tyler. Keep an eye out for him. And we thank you, as always, for the update. Great reporting at the White House from Tyler Kendall. Want to add the voice, as I mentioned, of a stakeholder here. We talk about SALT aid all day long. And if you live in one of the SALT states, well, I guess you are a stakeholder. But sometimes it's interesting to talk to somebody beyond an elected official here, because from lawmakers to lobbyists, this is a big deal right now in the throes of this debate. Colin Allen is executive director of the American Property Owners Alliance and joins me right now here in Washington, D.C. Colin, welcome. It's good to see you.
Thanks, Joe. Appreciate
Did I
being here.
describe you right as a stakeholder in this debate?
Absolutely. Yeah. We at the American the interests of individual homeowners and small property owners across the country, right? So SALT is a huge issue for people who own property across the country. You're not seeing the local taxes go down, right? As home values continue to go up, and local governments look to fund priorities. Sometimes even as you're seeing the federal government shrink what they're looking to do, right? You're going to need to see some of the local governments pick up the slack, and the way they do that is through property taxes. So I know living here in the DC area, both the valuation and the assessment went up on properties in the county that I live in this year. So it's been a while since we've seen that, and it's coming to you.
Well, talk to me about what the Alliance is doing. We should be clear, you're a 50C4 advocacy organization, so you can actually engage in lobbying and political activities. Do you have force behind this right now? Are you calling lawmakers about this?
That is correct. We're working to make sure that what we've seen is the House has given us a good provision here with $40,000 in SALT relief. That would cover most of what you'd see from a property owner. And what we were urging is for the Senate to finish the job here.
Yeah. Keep it where it is. Do you like the deal struck in the House?
The deal in the House is a good deal, and it'll cover, again, what we're looking at here is property taxes for the vast majority of Americans.
Well, listen, if you're lobbying this issue, you know more about this than anybody who's reading or hearing anything. You're on the front lines of the debate. What are you hearing from the Senate? Are they actually going to keep this intact? Because you know what the line is. There's no such thing as a SALT state in the Senate. If you're a senator, if you're a Republican senator, your state's not too worried about this issue right now.
Yeah, so what we're hearing, and I'd say look towards, the person that I've looked to recently is Senator Markwayne Mullin from Oklahoma.
Yeah.
Not just because I like what he's saying about SALT.
He's afraid of making big changes as a former congressman, I think, isn't he?
And I think look to him as a good gauge here, right? That he is still very in touch. He's a relatively new senator.
Yeah.
Been there for about 2.5 years and still has really good connections with the House leadership, especially on the Ways and Means Committee and the leadership of the House. So I think he is having those conversations and in a really good position to be a gauge for what the House may or may not be able to do from the Senate.
I wasn't kidding when I was talking to Tyler. When we do SALT stories, they become the most read on the terminal. When I talk about it on the air, all of a sudden my terminal lights up. I get email, I get tweets, because so many Bloomberg viewers and listeners understand this story and so many are impacted by it. If you're living in a state, though, where you do not have high property taxes and they're talking about a blue state bailout, what's the answer to that? Because this is the debate we're in.
So I think one of the things, and try to illustrate that a little earlier, right, is that as we are continuing to see the value of homes appreciate, right, we're undersupplied, we're not building enough new supply is not coming onto the market. What we're seeing is that the values of homes continue to get more and more expensive. And I'd say as you look to the federal government maybe shrinking some of the responsibilities that they're looking at, a lot of those services are not necessarily going to go away, right? They're going to go to the states, they're going to go to the localities, and the biggest way that those organizations, those units of government fund their priorities is through taxes on property. So I'd say as we continue to see these increasing valuations and local property taxes going up, this is an issue that is going to creep across the country.
Well, you don't only have your ear on this debate on Capitol Hill, you have your ear on the market. That's the reason why you exist at the Alliance. And I want to follow up on what you just mentioned, because it's really interesting looking at the dynamics in this market. And we had new numbers by Redfin that you probably saw. Axios published today. A buyer's market, if you can afford it. There are nearly 500,000 more home sellers than buyers in the U.S. housing market. How long can this last?
So I think, and I was listening, actually, funny enough, this morning on the way in, listening to a podcast with Logan Motoshami from Housing Wire, kind of looking at that. And I think debunked maybe some of the numbers. I think his exact comment was, I'm going to give this a yellow card. Unclear where that number is coming from, right? I think it may be a proprietary formula from Redfin, but definitely something that you're seeing there. And what we may be seeing is maybe not this like imminent crash of 20 to 40% that I think you'll see some of the trolls on online talking about.
When we use these kind of hackneyed terms, is that not true?
I think we're probably coming back into more of an alignment, right? Where you're having a little bit more supply coming online, and buyers are coming out and saying, hey, maybe I understand that interest rates are not coming back down to 3 or 4%. I'm going to take advantage of where I am. I still have my job is good. I've had a change in my life circumstance, right? We've had a kid, I've gotten married, whatever it is, and I do feel that the time now is right. And that we're in a pretty good.
What would happen? Situation. We can't all live our lives around interest rates and whatever. You get a job, sometimes you got to move, or sometimes you need to or want to move. What happens if the Fed starts to cut? What if we get 50 basis points this year or more? What would that do to the market?
I think you would see an immediate interest in folks getting in and buying
People start
mortgages,
listing
right?
and buying. Is that right?
Absolutely. Yeah, no, I think that is very much, some of the folks who may be sitting on the sidelines, right? Yeah. This is one of the things that we talk about on the capital gains side, is that you've got especially older, longer tenured folks who've lived in their homes for a long time, may want to take advantage of getting in there and selling a property if they've been locked in, for a long time, and say, maybe I'll downsize now. It makes sense. Where it didn't
in place for a long time.
Exactly. Where it didn't make sense at 6.5%, maybe it makes more sense at 5.5%.
You're telling us you think salt stays where it is when it comes back to the house?
I think it's certainly open for debate, right? I used to be where I came from was that I would start off and say, I think the Senate is kind of they'd take the House bill, send it back and say, you guys can eat whatever we passed, right?
Yes, exactly. Will the Senate try to jam the House again?
I really feel like you saw this bill
bring the rapture.
You saw this bill pass with one vote,
yes,
right?
Exactly.
I think we're just in a fundamentally different spot here. I feel good. I've heard a number of different things mentioned, but I'm going to follow Senator Mullins' lead on this one and say I think we're in a good spot.
Please go to my store, the-studio-reykjavik.com, and make sure you get those lozenges and drops and gels, because YouTube doesn't want you to get those. But also get the heirloom barley. Heirloom barley is a high-density protein. You get a big scooper. This is a month's supply. Take it every day. Mix it with soft foods, filtered water, milk, or even a smoothie. But take it every day. It's going to help to detoxify your body, bring down inflammation, and soak up free radicals with superoxide dismutase. So please take that every day and get healthy. It's very powerful stuff. And that barley, that heirloom barley, is something very special that you cannot get at a health food store. All right? It's special ingredients in there. So please go to my store, the-studio-reykjavik.com, and get the heirloom barley. Also, let's talk about the protocol that I have. There's a core protocol. We talked about the foundation. The foundation is the multivitamin and the probiotic, but there's the core. And there's 4 pillars to the core. The first pillar is max 35, max 14, or cleanse. That will boost up that immune system. That's the first pillar. The second pillar is the C60, soaks up free radicals. The third pillar is turmeric, ashwagandha, and lignans to boost up the immune system and to help with your cardiovascular system. And the fourth pillar is Boomer Boost. Boomer Boost will boost up your energy levels and rev up your metabolism. So let's talk about the first pillar. I have in stock Max 14 and Cleanse. Cleanse is 30 parts per million, and Max 14 is 14 parts per million. And this is the first pillar of the core to help boost up that immune system. Take a teaspoon a day, swish it in your mouth, gargle, about 20 seconds, 30 seconds, and then swallow. Do that every day. If you're not feeling well, take a tablespoon or 2 and then go back to your maintenance dose once you feel better. All right? But the bottom line is to take it every day. I've been taking it for over 5 years. So please go to my store, the-studio-reykjavik.com, get the Cleanse or the Max 14. All right? Take it every day. Take a teaspoon a day. All right. Go to my store, the-studio-reykjavik.com. Use discount 5 and you get $5 off any order. All right, let's see. Let's see some of the news that's going on. All right, let's go to Bloomberg Podcasts. This was this morning.
Skill, imagination, and daring. Because
so a couple of weeks ago, we sat down, we had this conversation. What's going to happen between the hard and soft data? Are they going to converge, or should we actually be looking at the soft data? And the conclusion we came to is we're not completely dismissing the soft data, but what we realized is after the presidential election cycle, we should be looking at the betting markets, placing more weight on the betting markets. And the betting markets, or the prediction markets, I should say, are where we're getting our quote unquote soft data. And it's telling you a much different story on inflation, on recession, so on and so forth. So we discount significantly the soft data. We watch the hard data like a hawk every day. And when we want sentiment soft data, we're either talking to clients or we're looking at the prediction markets.
Talk a bit more about that. I'm very curious of how someone in your position approaches that world, which I think is a novel one or a new one to a lot of people. How do you make good use of the prediction markets?
Well, you're talking to a guy that when he was 7 years old was reading racing forms to his grandfathers. So I've been involved in these types of markets for a while, and I think there's a lot of information in these markets, and we saw that during the presidential election cycle. And what we do is we're just always looking for that signal. We're always looking for information, and there's information there. When we start to deconstruct how the surveys are done, we get less confidence on the soft data. And while people look at it, we have to think about it, and we have to react to it, we're just not putting a whole lot of weight on it. And at the end of the day, we're talking to our economists, we're talking to companies, we're going through transcripts. We're trying to break our thesis every day, and we're just having a hard time doing that.
How do you overlay the technology view forward and productivity forward onto a persistency of corporate earnings? To me, it's underestimated. Am I right?
I think so. I was around in the late 90s, and I remember what was happening there.
Way back.
Way back.
John, help me here.
And the comparison, it's not a comparison between today and back then. Back then, you had very levered companies. I'll throw out some goodies: WorldCom, Quest, Global Crossing, Level 3.
I own them all, thank you.
God bless you. But today, you have the hyperscalers, the AWS, the Microsofts, the Metas, the Googles of the world. These are companies that don't need to go to the capital markets and fund themselves, right? Furthermore, if you look at the technology, what we were doing is we were laying a dumb technology in the ground, fiber optic cable, which did not become obsolete for a good decade plus. Today, what we have is really, and I'm using the phrase that Jensen used, we have AI factories. You have the foundation, and on top of that, you have the innovation. And it's a very nice symbiotic release.
Joy, Chris Harvey with us with Wells Fargo. We continue as Chief U.S. Equity Strategist here. We do this at 8:09 here with futures improving. How are we lifting the market?
Yes,
Futures negative 18, now negative 9. The VIX nicely under 2018.
Okay, that was not live. That was a earlier recording this morning. Now the equity price right now for the S&P 500 is 5,975. So we're getting close to that resistance level of 6,000. And if you were paying attention to me, you would have made money. Now VIX is trading at 1791. Euro's trading at 1.13. Oil's trading at $63.54 a barrel. BITO is trading at 21.35. USD, Japanese yen, is trading at 144.03. Natural gas is trading at 3.68. UCO is the ETF for oil. That's a leveraged ETF. That's trading at 21.92. Gush is trading at 22.31, and DRIP is trading at 10.22. Now let's take a look at what Boyle is trading at here. Boyle, now there's some movement going on in natural gas. It's hard to keep track of it. Right now it's trading at a 15.16. So again, the resistance level, the intraday resistance level is 55.28. And if that breaks, then the next resistance level will be 60 for Boyle. So that would mean that natural gas would have to break above the 3.7 mark, or that probably 3.71 or 2, something like that, for it to start breaking the 55.28 resistance level for Boyle. All right, with that, let's just plug one product here and we'll go back to Bloomberg. Please go to my store, the-studio-reykjavik.com, and help support my work by getting the great supplements that I have. Now, this show is for free, and I tell you exactly in real time how to make money. All right, if you've been paying attention to me when I say resistance level and support levels, and you join in early in the morning, I even give you a pre-market update. So please go to my store, the-studio-reykjavik.com, and get the Good Night formula. Good Night Formula has tryptophan, melatonin, GABA, and passion flower. It'll help you to go into 3 cycles of REM sleep and deep sleep. What that will do is it'll help to detoxify your central nervous system. You'll be well rested, so you'll have more energy in the morning. And it'll help to consolidate memories, because when you get deep sleep and REM sleep, that will help the body to actually consolidate memory. So it's very important to have good sleep. Now, if you have adequate sleep regularly, then you will slow down the aging process. But people that have chronic sleep deprivation, they start having memory problems, they start accumulating toxins within their central nervous system, and it's just, you age faster if you don't get enough sleep. On top of, if you're stressed, your cortisol levels go up and increases the aging process. You don't want that. You want to bring those cortisol levels down and make sure that you have proper sleep. So please go to my store, the-studio-reykjavik.com, get the Good Night Formula and take it every night so you have the proper sleep to slow down the aging process and to help with your brain function.
Complete downturn. So just want to make that distinction there. And what they're saying is, very much what we're hearing from businesses too, and what hard data would indicate as well when you make that decision of what people say in surveys versus what their money and investment actually shows, is that that investment is slowing and that confidence has fallen, and that those things together are what add up to slower growth.
Interesting. The OECD predicting the rate of expansion in the U.S., as I mentioned, would tumble to 1.6 from 2.8, globally 2.9. Make a good point. I mean, does this actually help Donald Trump's argument that tariffs don't bring recessions?
I mean, I wouldn't say it helps the argument. It's certainly, when you're looking at a growth rate, more or less falling in half, that's not really,
maybe not.
That's not really helping your case, I would say. But like, in terms of saying that this isn't recessionary, at least for now, that seems to be the case. But remember, like, so much of what is holding us back from getting to that point is that there hasn't really been a consistent tariff policy in place for the last, really the entirety of this administration, and that it's still very much in the air with the courts and how many tariffs will be in effect and what tariffs can even be in effect when Trump is appealing several court rulings that say that they aren't legal. So that's all of this, again, adding up to this tremendous uncertainty right now. And I think a great point that the OECD made is that even if Trump reverses course on these tariffs, that there's still just so much uncertainty in the air already, and so much investment has been pulled back that it's not like you just then start making multi-billion-dollar decisions, at the blink of an eye. That takes a lot of time and a lot more confidence that the economics landscape is going to be, conducive to that.
Right. I always learn something when I talk to Molly Smith. We got JOLTS today. What happens with the jobs report on Friday?
Right. So the JOLTS data, gosh, I think I hate to trash like surveys when I talk about them, since I do look at these all the time, but I would say that the JOLTS survey is becoming of like less and less importance for me right now. I think that, when there were so many job openings back in like the labor market craziness in 2021 and 22, that's when this survey really was sending the most signal about what was going on in the job market. But for the past year, openings have really stabilized between 7 and 8 million, which is very much in line with pre-pandemic levels. And you can't really say much else about it on a month-to-month basis because it's so volatile, and you get swings of, 500,000 job openings at a time in any given month. So it can be really difficult to look at it from such a micro lens, but on a whole would say that job openings are still pretty stable. That's at least what the case was in April. The employment report that we get on Friday is for May, so can't really compare the two periods there.
Gotcha. All right. That's the truth from Molly Smith. Why don't we plan to meet up maybe on Friday? We'll talk about this jobs report because this is an important one here. Molly, thank you. And it's Bloomberg News economy coverage here. Look for Molly's byline every morning at 8:30. Let's assemble the panel because they've got to take on all of this. This is when the economy becomes politics and politics become the economy. Maura Gillespie is here, the Republican strategist, founder of Blue Stack Strategies, and Kristen Hahn, our Democratic strategist partner at Rock Solutions. Great to see both of you. Kristen, you know a little bit about this. When the economy turns south, everybody looks at the administration. And Joe Biden had an interesting sort of conundrum because The data were strong. I think Jared Bernstein described it this way on our show recently. The vibes were not. If the data start to turn like this on Donald Trump, what happens to his public perception?
Well, I think you're exactly right. It's the economy, stupid, and it's what we can talk about these numbers at a very high level. I mean, we talk about the jobs reports, and you can tell people all day long that things are okay, but if they're not feeling it in their own pocketbooks, they're not going to believe people sitting in Washington or overseas or telling them how they should feel. It's when it really hits the ground. So I think that we haven't seen. I mean, like your reporter was saying, there's a lot of uncertainty around these tariffs and how it's going to impact people, voters, everyday voters, businesses are not pulling back. They're not lurching forward. They can't make these big decisions. And ultimately that will have an impact on everyday Americans. And that will certainly have an impact come next November at the ballot box for Donald Trump.
Maura, you worked for a Republican Speaker of the House. When you see a headline like this, Trump tariffs hurting U.S. and global economy, OECD warns. Do your antennas go up when you start projecting months down the road looking at the midterms?
Absolutely. I mean, there's still a lot of time before the midterms start. But if, to Kristen's point and what you're talking about, if people don't feel as though grocery prices are going down or life here in America has become more affordable, that will impact what happens to both the House and the Senate, especially. But you also will probably start seeing it for these gubernatorial races coming up here in the fall. You have Virginia and New Jersey. And so that kind of an impact with that kind of a headline and not having something prepared and ready to go to counter it is going to be a real problem for Republicans who are trying to keep their majorities slim as they may be. But it's definitely going to be a concern. I think, again, it comes down to messaging as well. For a lot of the Trump MAGA supporters, they're going to hold on if the president says, relief is coming and I'm making deals and all these things. So they're going to hold on for a little while longer. I just don't know how long.
Really glad you said that, Maura. Do you know, nobody's talking about this. Early in-person voting starts in New Jersey today. Kristen, we'll have elections before the midterms to start basing some of this on, won't we?
Yeah, and I think it's going to be really interesting to see, what happens in New Jersey and some of these other places. We already saw, what happened in Florida, where, the Republican,
yes,
the Democrats way outpaced as far as fundraising and also well overperformed what they should have in a very, very Republican district. So, we'll have these little spots here and there where we'll be able to take a look and see. And I think there's also these gubernatorial races like Maura mentioned with Abby Stamberger in Virginia, and these strong candidates that are coming through, and can they punch past what normally would be, what Democrats should do in some of these districts that are tougher for them to win.
Yeah, if you're not paying attention to this, you should. Of course, if you're listening to this program, you probably are. But June 10, New Jersey holds primaries. June 17, Virginia has its primaries, another gubernatorial race. June 24, New York City primaries in the mayoral race. Maura, will these all be seen as and reported on proxies for Trump?
I think they will, because of how well he performed in these areas, especially, when you look at New Jersey and New York, you don't think of them as being anything but, dark blue, but they're becoming a little more purple. Yeah. And we saw that in the last election. And so this will be the kind of the first test, where the numbers show up for him or not. You're even seeing, largely New Jersey, the Democratic field is pretty stacked. But they're really attacking one another for being too moderate, which I think is disservice, because it's not a reflection of the past election. To go too far left, you're really just saying that you ignored what happened in 2024. So we're seeing that with these ads attacking Mikey Sherrill and things of that nature. So it'll be interesting. I think Republicans are definitely going to be keeping an eye on these races during this month of June.
You wonder what the turnout is going to be with some of these. Kristen, you know what fatigue is like after a campaign that we just endured. When you talk about New Jersey, Virginia, New York mayor might have...
For the ones that are watching, definitely we're seeing some movement on the natural gas. It's at 3.714 now. And oil ETF leveraged is now at 55.83. spiked up. So we are now past that 55.28 resistance level. And now the next resistance level is 60. Now, I suspect as we move towards about 2 o'clock, 2:30, natural gas will drift back down to the 3.6 handle.
Just talking about jobs and this looming jobs report on Friday with Molly Smith. Is the White House or the Republican Party at large, I'm not sure there's a difference, I don't think anyone would suggest really there is, projecting the right message when it comes to the economy? Short-term pain, long-term gain, just stick with me a little bit longer. We're going to be walking into a golden age. Do people buy that if they're not feeling good now?
If you're a diehard MAGA supporter, yeah, you're feeling it or you're going to keep that momentum going because the president is telling you to, and he is promising you.
Yeah.
And to them, I think for a lot of them, they trust him. They maybe don't trust their members of Congress, unfortunately, but they do trust Donald Trump. And so he has a stronghold over his voters that he is going to deliver for them. And so they are going to hold on. And I think you've got Congress who is, really mostly focused on this one big, beautiful bill and trying to corral the Senate now and getting them, to get this bill across the finish line. And really, Donald Trump could hold that over them, saying, I'm promising the American people relief and this golden era, but unless you pass that bill.
Please go to my store, the-studio-reykjavik.com, and get the resveratrol. Resveratrol is a supplement that I've been taking for decades. It's going to soak up free radicals because it's an antioxidant, but it's also going to help with the mitochondria. And when you have good mitochondria in your cell, healthy mitochondria, then what's going to happen is your ATP levels are going to go up. Also, resveratrol helps with youthful gene expression, and it gets rid of cells that are in senescence. Very important as part of an anti-aging protocol. Now, it stacks really well, and you get the max benefits of resveratrol when you stack it with NAD+, or ubiquinol, or even C60, and clarity factor. So please go to my store, stack it, take it every day, make sure you drink it with filtered water. Also, once you get to about age 40 years of age, you need to start worrying about atrophying of muscle. As you get older, it's harder to build muscle and maintain muscle. So to make sure that you have a healthy lifestyle and a holistic approach to life, but it's really important to gain muscle and to maintain that muscle mass, even though it's a little bit harder. Now, taking Myotrol is going to help you build muscle. Now, when you take this, you do resistance training, and it's going to help you to build that muscle. Now, Myotrol helps with the gene expression to build muscle. So it'll be easier for you to build that muscle. It'll be easier for you to maintain the muscle. It has polyphenols, flavonoids, and lignans. If you're an athlete, younger or older, you'd benefit from taking Myotrol also to help with strength for your sport. It stacks really well with Gladiator barley because Gladiator barley is a high-density protein. And with that high-density protein, it's going to be the building blocks of actually building the muscle. Myotrol helps with the gene expression to build muscle and to maintain muscle. So you get max benefits if you stack Myotrol with Gladiator barley. So please go to my store, the-studio-reykjavik.com, and get the Myotrol. Now, since we're talking about Gladiator barley is a high-density protein. It's a powder. You get a big scooper. It's a month's supply. Take it every day. Mix it in soft foods, filtered water, a smoothie, or even milk. But what it's going to do is it's going to help build muscle. But you do resistance training, and you're going to get faster results in building muscle. It'll reduce inflammation, so you'll recover quicker. And it'll help to detoxify your body and soak up free radicals with superoxide dismutase. It's a very powerful supplement. Take it every day. Make sure you work out. And again, working out means cardiovascular, resistance training, balancing exercises, and stretching. But to gain that muscle, resistance training is really important. Stacking gladiator barley with the Myotrol is going to enhance the effects of building up muscle. So please go to my store and get those supplements, the gladiator barley, the Myotrol, and the resveratrol. It's a great stack. So please go to my store, the-studio-reykjavik.com. And don't forget, make sure you get the lozenges and the drops and the gels, because YouTube doesn't like you getting those. Wonder why? Please go to my store, the-studio-reykjavik.com.
The world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
The House holds its breath as the Senate takes up the big bill. Welcome to the Tuesday edition as President Trump digs into negotiations with senators now who could make major changes to the legislation. And then what? Alongside Kaylee Lyons, I'm Joe Matthew in Washington. Thanks for being with us on the fastest show in politics. Kaylee, the president met with about a half dozen senators yesterday, all of whom have their own concerns.
Yes, indeed. One of the loudest perhaps being Rand Paul, the senator who does not want a debt ceiling increase included in this legislation. He spoke with President Trump yesterday, and President Trump had some words for him publicly this morning on Truth Social. Rand votes no on everything. His ideas are actually crazy.
Yeah.
He says.
I guess they didn't have a good call because they were on the phone yesterday. Several of these meetings were in person, including John Thune, who, boy, he's got a lot to balance right now as this bill makes its way through the Senate. We're going to be talking about this coming up with someone who's been there, Bill Hoagland from the Bipartisan Policy Center, a veteran of the Senate and knows about times like these.
Well, certainly also knows about the rules of the Senate, including the parliamentarian, because it's not just about what senators want to change that's in the bill. It's also what can pass muster when all of this is supposed to be a matter of budget reconciliation. And the parliament may decide some of the things the House put in there don't fit that bill.
The bird bath might bring some changes. We'll also get an update from the White House. Bloomberg's Tyler Kendall is standing by on the North Lawn as the phone continues to ring in the Oval Office.
Indeed. But first we go instead to New York at our global headquarters, where we find Charlie Pellet, as always, keeping an eye on the markets for us as we kick things off. Hey, Charlie.
Well, hello there. Indeed, a familiar theme. Just about every update I've been telling you, we're at the high of the session. That is the truth right now, with the Dow Jones Industrial Average up 193, up by about 0.5%. We've got the S&P up 39 now, up by about 0.7%. NASDAQ up almost 200 points, up 197, higher by 1%. The Bloomberg Mag 7 Index also higher now by 1%. Stocks are gaining as U.S. jobs hold up amid the trade war. The 10-year, 4.46%. The 2-year right now at 3.96%. Gold now slumping 1%, 33.49 the ounce. And West Texas Intermediate crude up 1.8%, 63.65 a barrel on WTI. Bitcoin just below $106,000. Bitcoin right now higher by 1%. Constellation Energy has agreed to sell power from an Illinois nuclear plant to Meta Platforms as artificial intelligence sends power demand soaring. Shares of Meta, they're slumping now by 0.1%. Constellation, though, up by 1.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. Here in Washington, we have our eyes on Capitol Hill, specifically on the Senate, after we spent weeks watching the House of Representatives and the wrangling that it took to get the House Republican Conference in line to pass President Trump's One Big Beautiful Bill, as it is actually, this legislation is actually now called the One Big Beautiful Bill Act. Remember, it took a lot of wrestling, arm wrestling from the Speaker of the House, Mike Johnson, but also from President Trump himself. In some ways, arguably, Joe, it's President Trump that's acting as the majority whip. I don't know where Tom Emmer is in any of this, but the question is going to be, can President Trump play that role as well in the United States Senate, where the dynamics are a little bit different, though certainly we see evidence today of the president trying.
Dynamics are really different, as John Thune would tell you, beginning with SALT. You don't have senators, Republican senators, in SALT states, which is the beginning of just a long list of different ideas that are going to be coming out of the upper chamber. Whether they make them into legislation has yet to be seen. Tyler Kendall is standing by at the White House for us right now. Bloomberg Washington correspondent with her eye on the administration's take on this, because Tyler, that does seem to be the energy center is on President Trump's end of Pennsylvania Avenue right now, right?
Yeah, hey, Joe. President Trump really trying to ramp up the pressure on these Senate Republicans, making phone calls, posting on Truth Social, as you've been mentioning, because we have to keep in mind here, the White House is dealing with some pretty conflicting demands when it comes to these Republicans that want to make changes to the House bill. On one hand, you have this group of senators pitching themselves as fiscal hawks. Rand Paul, you mentioned, also Senator Ron Johnson, who had a phone call with President Trump yesterday, says he has plans to meet with the White House's economic team, and he wants to see some deeper spending cuts. But of course, on the other hand here, we have those concerns from Republicans about what changes to benefit programs could ultimately mean, particularly when it comes to Medicaid, perhaps speeding up those work requirements. Also, the House's plan to freeze the Medicaid provider tax, have some of the states take on more of that cost sharing. These are all raising concerns and really is a politically fraught issue for this White House. President Trump doubling down in recent posts on Truth Social, saying that the bill will not cut Medicaid, but there are analysis out there, including one that we cite here at Bloomberg News, that predict.
All right. Natural gas is now trading at 3.715 and oil is trading at 56.54. So if you've been listening to me throughout this broadcast, you can see that oil is moving. So where the support level is 55.28 and the resistance level will be now 60 for oil.
That are raising concerns.
Yeah, Rand Paul says he thinks there are at least 4 who could be ready to stop this thing in its tracks, knowing that the White House is up against a kind of self-imposed deadline, if you will, that Senator Thune, Tyler, seems to be going along with. They want this done by July 4th. When would that mean it actually leaves the Senate if it still has to go back to the House, if it's to get to the president's desk by Independence Day?
Right, exactly, Kaylee. It's definitely an expedited timeline. Senator Tom Tillis, a Republican from North Carolina, did tell reporters yesterday that the Senate's current plan, their goal is to get some of those Medicaid and tax changes over to the White House to review by this weekend, and then to push more of a fuller draft of the package in the next 10 to 15 days. This would be incredibly expedited. Now, of course, they want to see this done by July 4th because that ultimately gives lawmakers a little bit of buffer room here against what really is going to be that hard deadline, which of course is the X date. We even had Treasury Secretary Scott Bessent really say that that is going to be what adds fuel to the fire for these lawmakers, because it is one big, beautiful bill. So they are, of course, also attaching a hike to the debt ceiling. And we were talking about Senator Rand Paul before. His biggest point of opposition is that this bill ends up lifting that ceiling. But when you look at the details of this, the House plan lifts it by $4 trillion, Joe and Kaylee, but the Senate has said there's enough runway to lift it up to by $5 trillion. So there's still disagreement even among that issue too.
All right, Bloomberg's Tyler Kendall live on the North Lawn of the White House. Thank you so much. As we consider the positions of various senators here, Senator Cynthia Lummis, the Republican from Wyoming, was on Bloomberg TV and radio in the last hour saying that there are changes she needs to see on Medicaid, specifically if she's to vote yes for this bill. And we had a similar conversation with one of her colleagues, Senator Kevin Cramer of North Dakota, joined us on the late edition of Balance of Power yesterday. And we asked him if he'd be prepared to vote yes as it stands right now. This is what he told us.
I want this to pass, but there's no reason that the Senate should just simply rubber stamp it when we can do so much better. I think it was interesting listening to the leader from the House say they don't think there's any way to find more savings, and I think that's really the thing we have to do. We will not be able to pass the bill without finding some more spending cuts. I do think, though, by and large, it will look similar to the House bill, but we just may be able to find some other places for savings.
So for more on where exactly they might be able to find savings, just how big these changes to the numbers might be, we turn to Bill Hoagland, Senior Vice President at the Bipartisan Policy Center and former Republican Staff Director for the Senate Budget Committee, who was here with us in our Washington, D.C. studio. Bill, welcome back to Bloomberg TV and radio. Always good to have you. When you look at what you're hearing from the various factions in the Senate, those who want steeper cuts, those who think the cuts maybe go too far, who would you anticipate wins out here? Or do they actually cancel each other out and we're not going to see many changes at all?
No, I think there'll be changes in the bill, and I think it is likely that they will come together. There's a lot of pressure being put on, particularly as it relates to if they do not put something together here, the tax increases that will take place will hit 68% of all those out there who file taxes, one way or the other, how much that is. But certainly there will be pressure. Changes will take place. They'll have to take place. There's no question in my mind that there are a number of provisions in this bill that the House sent over that are what we call birdable, in the sense that they do not belong in this bill. They have no budgetary consequence. And so it will change. Now, the question I would ask, though, is to get it done and on the president's desk by July the 4th is a rather expedited process. But what that tells me is that the Senate will have to negotiate what they pass. The House will have to just simply take up and pass. And that's where the difficulty is going to lie in terms of can they put a bill together in the Senate that the House can simply take and pass.
Should we assume that the current policy baseline accounting method is okay with the parliamentarian? Will that be the case in the Senate?
Well, Joe, that's a very good question. It's a question that I've been asking myself for quite some time.
Mike Johnson seems to be making this assumption.
I think that being an old budgeteer, I don't think that it passes the test that is necessary to get around a bird rule. There is a problem here with the current policy baseline, and I don't want to get into the weeds here, but it does impact upon what we call the bird rule, which is adding to the deficit beyond the 10-year window, in which case then it would be it would violate the process. And historically, I've been out of the 23, 24 reconciliation bills that have been enacted over the 50-year history of the Budget Act. I participated in about 20 of them, I guess. And we've always used current law, not current policy. But at the same time, I will tell you what I'm picking up, and as an old budgeteer who thinks deficits and debt matter, I'm picking up it doesn't really matter right now. They aren't concerned about the debt and deficit, and that's disconcerting to me, if nothing else.
Well, we've also heard from the majority leader, Senator Thune contends that actually it's up to Senator Lindsey Graham, who leads the Budget Committee, to decide whether current policy baseline is justified or not. Do you see John Thune as being willing to defy the parliamentarian on that or any issue?
No, I don't. I think the majority leader has, I understood, made it very clear he's not going to question the parliamentarian. And therefore, I don't think he would go beyond the parliamentarian's advice. Now, again, the parliamentarian gives the advice to the chair. The chair rules, not the parliamentarian. And so it's possible the chair could say, current policy is fine and we'll go forward with it. It's an unanswerable question, Joe. I'm sorry at this point to give you that answer.
Well, this is, we're getting to the rub here. I mean, yes. The old line that the Senate is the saucer that cools the tea. Is it going to be the opposite this time?
I think the Senate is going to certainly modify the House, the hot tea of the House. And
turn up the heat under the tea.
But honestly, this is going to be a very dicey exercise, obviously, for the majority leader in the Senate, because he has to also make sure that whatever he passes can get passed back into the House and not fail in the House, too. So getting the two sides, the ones who want more deficit reduction and those who don't want to make the particular reductions that are necessary, this is going to be a very, very difficult exercise for the new majority leader.
When we consider the Medicaid issue specifically, President Trump is contending that there are false statements being made, that these are not Medicaid cuts that are happening. We've been told the same by many Republicans on this program, including Congresswoman Ashley Hinson last night, who told us that this is just fear-mongering on the Democrats. This isn't about cuts. It's about making sure the program can last long term. How realistically should we be framing these Medicaid alterations, cuts, whatever you want to call them?
I think I think there's truth in both arguments that are being put forth. Number one, work requirements. Are the work requirements a cut? No, if they're requiring individuals to participate in the Medicaid program, and if they choose not to because of the work requirement, is that a cut? I don't know. At the same time, the provider tax that's in there does impact directly, I think, nursing homes, rural hospitals. That could feed back to being real cuts on individuals. So when the CBO makes the estimate and your reporter indicated also about 6.7 million, 7 million people that would be removed from the Medicaid rules because of this. I think it's hard to say there aren't going to be reductions here. And particularly the one area that should be focused on, I think, as coming from a rural area myself, is the rural hospitals. They could very well be hit by the provider thing. One other thing I want to make, Kaylee, that point I would make is that we should also look at the SNAP program, the food stamp program, and the changes that are being proposed there, which are work requirements also, but also the requirement that the states pick up a particular share. Right now, the SNAP benefit itself is 100% federal. If you're asking the states to pick that up, for the SNAP benefits, and then you're asking the states to pick up the administrative cost associated with the work requirement. There are going to be some major shifts in administrative costs to the states, and those are, a lot of them are red states, and so when those red state governors start calling their senator, I think it will make some changes.
Well, you're really putting your finger on. So Jim Justice knows this, which is why he's been talking about it. Republican senators with big rural communities in their states are deeply concerned about that provider tax. They see nursing homes closing, rural hospitals closing. Does that mean Republicans crank back the changes to Medicaid? I think there will be some changes in the Medicaid program, particularly coming out of that. You reported so many times here. We got Susan Collins, who has concerns. You have Murkowski has concerns. That's right. Josh Hawley, of all people, conservative senator, has concerns about that. These are big issues in rural areas of the country and rural hospitals. Yes, I think there will be changes.
Well, as we wait to see what those changes are in the Senate, the House is also going to be taking up some work this week, as the White House is now formally sharing a precision package with the House. PBS, NPR, USAID funding, I think it amounts to about $9 billion. Bill, I think they're going to make a big deal out of this, but is this a big deal or is it a drop in a bucket?
Well, $9 billion is nothing to snuff at. And I would say that, yes, it is a big deal. The question here is, I'm not clear. I haven't seen the proposal yet, whether it's the $9 billion is made up of basically the USAID funds and then the public radio and public communication. And my sense here is if they put those two together as one package, it probably does pass the House. I'm not sure it passes the Senate, though. Again, we're back to the rural areas that depend a lot upon some of the corporate broadcasting systems that are out there. Not to take anything away from Bloomberg at all, of course, but definitely. Yeah. So, yes, that's it. One thing you should know is that this is probably just the start of rescission. This is something under the Impoundment Control Act. The president has every right to propose to Congress the elimination of funding that has been made available. My sense is there's going to be a lot more coming later in the year.
Yeah. Will that be coming with help from the Doge, or is that a separate?
Well, it's separate from Doge, but the Doge proposals that now take actual form in the form of a rescission that would be submitted to Congress. I don't want to get into the weeds too far here, but you have 45. Congress has 45 days to act on a rescission package once it's submitted. Either you approve it or you don't approve it. And if you wait until, say, the middle of the August recess and you propose those, it is possible that those rescissions would go in effect without any action by Congress. This is what we call line item rescission veto. Yeah. And so be aware that there's some more coming.
And that can happen during a recess, is what you're saying.
It's not. They're not on official recess. Okay. There's continuous session. They will not go on recess during the August
so you keep one
vacation.
Pro forma
the pro forma largely so that they can avoid recess appointments.
Right. Wow.
Remember when we were having a conversation about recess appointments every day?
Yes, we were.
Around the cabinet nominees.
Just wait, it'll come back around. We'll call Bill Hoagland. It's great to have you with us.
Thank you,
Bill, as always. A veteran of the Senate, now with the Bipartisan Policy Center, and giving us a real sense, Kaylee, of what we can look for with changes that are coming out of this bill. You wonder if Donald Trump told John Thune to keep it the way it is.
Yeah, well, certainly the Speaker of the House hasn't been shy about doing that, saying, Mr. Majority Leader, you need to change this as little as possible if you want me to be able to pass it a second time. We'll see how much louder the voice of the president gets on this.
Yeah, may not be very practical for John Thune in the meantime. Stay with us. We're going to assemble our political panel next. Maura Gillespie, Kristen.
Please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. Boomer Boost is a supplement that I take every day. You either take it in the morning or in the afternoon, and it has 68 nutrients. It has a very comprehensive compound. So take a look at the label on my website, the-studio-reykjavik.com. It's very comprehensive, and what it's going to do is it's going to boost up your energy levels. You're going to have a steady level of energy throughout the whole day, no spiking of energy. Your metabolism is going to be revved up. You're going to lose weight safely and consistently. It will also help with your cardiovascular system, your brain function, and your musculature. It's a very powerful supplement to take. But again, you would save money. You lose weight, you save money, because the cost of 1 month supply compared to what you spend for 1 month of breakfast or lunch, and guess what? You're saving money and you're getting healthy. You take a 1 scooper a day, mix it with soft foods, filtered water, milk, or a smoothie. I mix it with soft foods, but you take it every day. And what this is going to do is also help with your A1C levels, help control those. Now, if you stack it with the Gladiator barley, that will supercharge the compound. And what you'll notice is that you'll be gaining strength, you'll recover quicker, and you'll be able to control your A1C levels even more. So it's best if you stack the Boomer Boost with the Gladiator barley or the Heirloom barley. But you can take Boomer Boost separately, and you can take the barley separately, and you'll get benefits from it. But you supercharge the stack if you take them together. Now, again, the Boomer Boost is also the 4th pillar of my 4-pillar core protocol. The first pillar is the max 14, max 35 or cleanse to boost up the immune system. The C60 is to soak up free radicals. The 3rd pillar is the turmeric, the ashwagandha, and the lignans to boost up that immune system, and Boomer Boost to rev up your metabolism and boost up those energy levels. So please take this every day. You'll notice the effects of this in 72 hours. You'll notice a difference. So please go to my store, take this. This is really important to take. Now, you'll also have more vitality. When you're taking it, you'll notice that you'll want to move around. You want to be active. You'll want to be an active person. All right, so please go to my store, the-studio-reykjavik.com, and get the Boomer Boost. Take it every day. Now, I also have C60. C60 is the 2nd pillar that I was talking about earlier to soak up free radicals. You can get it in a 2 ounce, a 4 ounce, or an 8 ounce configuration. It is cheaper to buy on my store at the higher ounce configuration because it's cheaper per ounce. But you can get it in an MCT coconut oil, avocado oil, or extra virgin olive oil. Now, the reason why it's in an oil is that C60 is lipid soluble. So for you to be able to absorb it, it has to be suspended in a lipid or an oil. So go to my store, get the extra virgin olive oil, the MCT coconut oil, or the avocado version. Take a teaspoon a day. And when you take a teaspoon a day, on an empty stomach preferably, for best absorption, you're going to soak up free radicals in your cells. And when you soak up those free radicals, what happens is that you are reducing the stress on the cell. Free radicals oxidize your tissue. You're literally rusting. You know, when you get older, you build up free radicals, you're rusting. You're oxidizing, all right? So you want to soak up those free radicals so you don't rust to death, all right? So basically, all right, you're soaking up these free radicals at the cellular level and at the blood level, at the serum level. And when you soak up those free radicals, you're reducing stress and you're reducing that stress in the cell, so it's going to perform better. And by soaking up free radicals, you're improving the mitochondrial health in the cell and in your neurons. And what that does is that you're going to have lots more ATP. So you have lots more energy. If you notice that people, what are some of the things that people observe when you look at geriatrics? People that are getting older, they have less energy. Well, a big part of that is that they have a buildup of free radicals, and they also have a depletion of the healthy mitochondria. So when you have a depletion of healthy mitochondria, your ATP goes down. When your ATP goes down, your cells don't have the energy to perform. And so you're sluggish. And then there's a downward spiral. There's atrophying, and then osteopenia and osteoporosis and cognitive decline. And it's a downward spiral. Well, you want to mitigate that at all of those different levels. You want to make sure you build muscle. Well, you got to make sure you don't atrophy. You got to build that. You got to build higher levels of ATP. How do you do that? Improve the mitochondrial health. Reduce free radicals. Well, that's soaking it up with lots of different antioxidants. So C60 is a very potent antioxidant. It's hundreds of times, if not 1,000 times more potent than vitamin C. The reason being is that one molecule of C60 can soak up hundreds times more than one molecule of vitamin C. Why? Vitamin C can only neutralize one free radical, and then it's done. The molecule is changed and it can't recharge. C60, the way it's designed, the way the molecule is, it recharges. And it neutralizes those free radicals. All right, so please go to my store, the-studio-reykjavik.com, get the C60. I've been taking this since 2016. And what you'll notice is that your energy levels are going to go up. What you'll also notice is that you'll be thinking more clearly. You will have better memory, because what happens is that you're reducing the stress in the neuron, because you're soaking up those free radicals and helping the mitochondrial health. You need lots of ATP for those neurons. In addition, when you reduce inflammation, reduce stress in the cell, you're improving the health of the myelin sheath, which is really important for the axon of the neuron. So to improve your overall different systems, your tissues and your organs, your cardiovascular, your neurons, take C60. If you soak up free radicals at the vascular level, you're reducing oxidized LDL. Well, if you reduce oxidized LDL, you reduce plaque formation. It's really simple. LDL oxidizes because of free radicals in your bloodstream. So please go to my store, the-studio-reykjavik.com, and get the C60. Very powerful stuff. I've been taking this since 2016. And another thing that you'll notice is that within a couple months, your body is performing better. All right. You have more energy, and there's less stress at the cellular level. Your endocrine system will start performing better. Your vascular system will start performing better. Your neurological system will start performing better. But another thing that you'll notice is that you're just aging slower. And the reason being is you're soaking up all these free radicals. So a big snapshot between the time you start C60 to, let's say, a year later, you're going to see major differences in just the aging compared to a peer group that isn't doing that. All right. It slows down the aging process because you're soaking up so much free radicals, and you're mitigating some of the problems with age, because you're boosting up those energy levels, and you're keeping that mitochondria healthy. It's really important. All right. It sounds simple, but you know what? Aging is a simple concept. It's not as simple as like, well, you just age. Well, no, there's certain things that are happening with your biochemistry, but you can slow down those things that are happening with your biochemistry. Right? You can't roll back the clock from age 40 to 2 years old, but you can go from 40 and roll back to 30. Or you can be at 40 and slow down the age progression. So if you weren't taking it, you may be at 40 and you get to 50. But if you're taking an anti-aging protocol, you may be going from 40, instead of 40 to 50 over a 10-year period. You're going from 40 to 43 in a 10-year period. And that's why I say that you should be taking this over a multiple year period, because you're going to see compound effects because of it. Because over a 10-year period, if you didn't take it, let's say, as a control. Let's say if you didn't take it and you were 40 years of age and you waited 10 years, well, you have 10 years of aging. Okay, so you're now 50. All right. Now, if you were taking it and you went from 40, for 10 years you're taking it, and you went from 40 to 43 in terms of biological aging, and then you do another 10 years, you're really chronologically 50, but biologically 43. And you take an additional 10 years from age 50 to 60, now you're at age 43 to 46 or 47, and you're 60 years old. That's why I keep on saying that if you follow my protocol, you're going to see huge benefits. So please go to my store, the-studio-reykjavik.com. Now, I did a broad brush of an anti-aging longevity protocol. All right, there's some nuances. People's tissues have different ages based on methylation, based on telomere length. So, and also, based on gene expression relative to when you're younger. All right, so you can have a heart that's 50 years old. You could be 30 years old, right? So your different tissues can age at different rates, slower or faster relative to your chronological age. And that's the reason why it's so important to target certain systems. Targeting your cardiovascular, targeting your liver, targeting your kidney, targeting your GI tract or your brain, when you or skin, so when you target them, then you're getting it back into alignment if it is out of alignment. All right. So some people, some organ systems or some tissues age quicker for different reasons, but you can slow it down. You can slow down the process. Now, when we say from age 40 to 50 and you take antioxidants and you're aging much slower, I'm talking about the average age of all the tissues. But in some cases, you may actually get more benefits or less benefits depending on the situation in your body. And that's the reason why you want to get telemetry. You want to get, serum data. You want to get, ultrasound data and EKG data and all that, and watch that every 6 months or every year. And you'll notice that when you're taking these protocols that I'm talking about, you're seeing your numbers are improving. And not only that, you feel better. You're going to notice that you just have more vitality. So your experience, your personal experience on it, of this slowing down of the aging process, plus seeing those numbers based on biometric data, what that will do is it'll show you that you're targeting the right things in your body and that you're moving in the right direction. All right, but you can't roll back. You're at age 50. You're not going to turn it into a teenager. That's not how it works. But the thing is that you can slow down the aging process going forward. And in some cases, you can heal certain tissues and have it go in reverse. But you can only go in a reverse so much. All right? But the body ages differently in different areas of the body. And different people age at different rates. So, and it's based on lifestyle, it's based on environment, and it's also based on, genetics, right? Or proteomics. So please go to my store, the-studio-reykjavik.com. This is the end of my transmission. I greatly appreciate you following my work. Please go to my store, the-studio-reykjavik.com. I will see you in the next broadcast.